Oh, you guys can't hear me? Can you guys hear me now? Chat. Sorry, I was just fixing stuff up and letting people get in here and then getting my charts cleaned up. But you guys should be able to hear me now. Okay, so let me repeat that then. So it's Friday, coming towards the end of the week, right? We don't want to risk anything extra in the market or risk our profits and take any unneeded losses. And we just want to manage our risk, look for any probable trade ideas, and make sure we don't go into the weekend all depressed and angry. Okay. So of course, if you are new to the Capital Hungry stream, we use different fundamental and technical concepts to map out trade ideas across some of the main pairs we look at, such as XAUUSD, which is gold, of course, GBPJPY, EURUSD, USDCAD, and US30. Okay, we do look at other pairs if you want to send in analysis via trading view link, but these are some of the main pairs we look at. And I just wanted to start off by looking at market sentiment, which is the investor behavior bias, before we jump into looking at some of the fundamental events we have going on, as well as the economic data reports overnight, and then dive into the market structure and price action as we mapped out some trade ideas across these pairs. Okay. Of course, if you're new, you have the live news headlines to the left of your screen here. You also have some of the key recent fundamental points that pop up on the YouTube stream like a little TV. And what we want to identify, and I am going to talk about when I show you the sentiment indicators, are the fact that the US dollar and the Japanese yen, um, individually as safe haven currencies, are starting to pick up strength on the intraday perspective. This is coming from US stimulus talks showing little progress, a lot of uncertainty around US elections, and there was a lot of uncertainty if the presidential debate was going to be a shit show. Brexit talks are also turning more on the negative side as time is starting to run out. And of course, there's still a lot of uncertainty around global COVID cases and global COVID spikes. So, with that being said, we can see some of our safe haven currencies, like the US dollar, is starting to break out of bearish intraday structure after the dip got bought up by buyers, as well as the Japanese yen standalone. We're looking at the Japanese yen currency index also is still respecting bullish market structure and going to retest previous highs. And even though the volatility index is still in bearish market structure, we can see we have failed to break the support at around 24 multiple times now, with the potential to finally break to the upside if we have that market fear. Of course, the volatility index is just giving the inverse information of the US equities. So I just like to take a quick glance at these different trading instruments to use them for information about investor bias. So when you see that the US dollar, the Japanese yen, the Swiss franc, the volatility index are all very bullish, you know market fear is a lot stronger as investors are putting their money into these safe haven currencies to protect their assets, right? But we're primarily overnight just going to keep it on the US dollar and Japanese yen, and mainly keep an eye on the US dollar. And we're just going to put it on the candlestick chart to use as confluences while we're trading gold, Euro USD, and USD CAD. Because, of course, if market fear is picking up and the US dollar is strong and it continues to respect this bullish market structure and go back to revisit around 93.3 key level, we can use that US dollar strength to take advantage of some potential Euro USD sells, XAU USD sells, gold sells, as the inverse correlation between gold and the US dollar has been more prominent, as well as UCAD buys if the price action and market structure also lines up, right? Some of the economic events we have going on tonight, which you should see pop up on your screen right there, that we want to keep an eye on, are the UK retail sales in the next around 23 minutes. Euro PMI between 315 and 4, because we have, first to start, we have France PMI figures at 3:15, Germany PMI figures at 3:30, and then Euro PMI at 4 a.m. Eastern, which we will keep an eye on as they get released for the impact on euro pairs, and of course UK PMI at 4:30 in the morning, and then US PMI is during New York session to close off the week. That is some of the economic events we have going on. And just some quick stream reminders for anybody who asks questions before we start jumping into the analysis now. As we do understand, market fear is picking up. US dollar is showing us some more intraday short term bulls. Japanese yen is starting to pick up strength. We do have risk currencies getting a bit softer towards the end of the week, as well as equities when we take a look at that. Of course, we want to keep in mind some of this economic data that's going to come out because it can change the sentiment. If the data is, of course, very strong, it can, of course, give GBP a bit of a bullish boost if its PMI and retail figures are solid, as well as if Euro PMI figures are solid. But with how market fear is picking up, if that data is a miss, it if that data is a miss, it will of course add to our fear sentiment and support GJ sells, Euro USD sells, UCAD buys, and gold sells accordingly. So we just want to keep an eye on that. But here are some stream reminders, as a lot of people ask these questions. And just before we get into it, for anyone who asks, you have the Capital Hungry Twitter page here where constant headlines are being posted as well as reminders of the live streams, different webinars. So here's the link, of course, at the top. You have the Capital Hungry free analysis chat, the Telegram chat, the link at the top. And of course, you have the Capital Hungry YouTube itself with all of these videos for your disposal to increase your knowledge about the markets. Okay, so just keep that in mind. If somebody else asks about any of the resources provided by Capital Hungry for free, just tell them to rewind to the start of the stream so I don't have to keep wasting my time talking about nonsense, you know? So the Capital Hungry Twitter posts headlines, a bunch of news. It's slowly increasing its following. Capital Hungry free analysis chat, Capital Hungry YouTube. Okay, the Vimeo is for private members. Sorry, all the private webinars are there. Yes, Chu. If the U.S. stimulus does not happen, it is a bullish bias for the U.S. dollar, and it will drop U.S. equities and stock market as it's bringing more uncertainty to U.S. economic rebound. Because you're pretty much taking away that relief that is meant to be given to the U.S. citizens. So it would increase the value of safe haven currencies and bring uncertainty to the market, and of course drop equities. But also, that's a good reminder, as we are looking at global equities right now, we could see that UK equities and Euro equities, the German DAX, for example, are in some bearish market structure. Dow Jones has also broken some intraday bullish market structure, and even though it's had a strong bounce off 28K, does have the potential to revisit these lows, which is what I want to look at for potential sell at a break of these candle body lows, but we will talk about that. And there is the potential just towards the end of the week for equities to get a bit softer and investors to close off some positions on these equities and also move into the safe haven currencies if we have that market fear. Some people are talking about the Japan and UK trade deal that just got signed and finalized, and how that can potentially bring some optimism for GBP and give it a bullish boost. But you have to understand that has been in the talks. That has been in talks for a couple of months now, and it actually got finalized, the agreement, a few weeks ago, and that move has already been priced in. This is just when it's now been signed, and we don't see any immediate impact from that. It's priced in, and that optimism has faded out weeks ago. So I'm not really going to keep too much of an eye on that unless we see a shift in structure. But let's just start by mapping out some trade ideas. As we understand, the US dollar is holding some strength for now. The Japanese yen is holding some strength, but we are going to watch them accordingly. And let's look at the intraday structure on gold, GBPJPY, Euro USD, USDCAD, and US30. So let's take a look at gold here. We can see that gold was respecting bear structure, but we did have a clean breakout and retest of the bear structure and ran up to previous intraday highs at 1929. What we want to identify is that buyers, even with all of this liquidity that was generated in this technical wedge, where we had buyers and sellers failing to break previous intraday lows and previous intraday highs, this was just an area of consolidation on an intraday perspective where order flow was being generated in the market, and we had an upside breakout with that order flow. Even with that buyer liquidity in the market, it still was not enough order flow to break above our higher time frame historical price point 1929 or previous intraday highs peaked by buyers. And then, as we had market fear pick up with uncertainty around Brexit, uncertainty around US stimulus and global COVID, uncertainty around US elections, and as that US dollar got that bullish boost to break its own bearish structure here from an intraday perspective and start forming some intraday bullish structure, gold, of course, moved in inverse and snapped back below bearish market structure and back below 1912 previous intraday highs. So now what we want to identify is we are seeing more sellers impulsive moves after buyers failed to break those highs with US dollar strength, and this upside so far is looking fairly corrective. We can see the sell-off from the peak point down to the low was around 300 pips. So even around 150 pip correction to retest the bearish market structure in 1912 key level would be ideal to get more seller order flow into the market and then continue our way down with that seller's impulsive moves to create new lows and with that US dollar strength. So from an intraday perspective, what I'm looking at is more a sell bias on gold. We do have the potential just to peak up to 1912 and then see a sell-off down, but safer sells would be below 1902. So if we can have a break and retest on the lower time frame below 1902 and continued US dollar strength, that would be safer sells. On the lower time frame right now, we are respecting some bullish market structure as well as our 1902 key level and this intraday bullish structure from these key rejection points. So we do have the potential to get that pullback to 1912 and then see that continuation down. But I am primarily on gold in a sell bias. So when we look at the lower time frames here, let's just get rid of this. We can see we do have some minor bullish market structure being created just on the lower time frames. So we're just going to keep it now that we understand the intraday analysis, now that we understand that we do have potential for more US dollar strength and gold is more of a bearish bias. I would only see, we're going to keep it on the 1 minute chart, and I would only see safe buys if we broke back above 1902. Because if we start respecting this bullish lower time frame structure, and then the US dollar turns bearish, as we are getting an area of price sensitivity created here at this previous area of at this previous order block resistance, whatever you want to call it, buyers are currently reacting and having some exhaustion at this level. But I would need the US dollar to revisit these low points and gold to break above 1912 to take that 100 pip squeeze up to around the 1923.5 handle. Because what the confirms we would be developing there is we respect bullish lower time frame structure. We break above 1912, which is a historical price point, and also would be correcting this impulsive move to the downside. And we break back above that bearish market structure on the intraday perspective. With those confirms, I would see safer gold buys. Okay, so I'm just going to quickly type that up. Okay, otherwise, if we, as this is looking like more corrective action and just a pullback to correct some of this impulsive sell move from the 1929 point, we still have this lower time frame bearish market structure as well. Let's just clear that out and keep it on the lower time frame here. We would need those confirmed. Even if we do break out to 1912 and reject, this would be higher risk, higher reward sells, and then coming back below 1902 would be safer sells. That would go easily 50 pips right back to previous intraday lows and then break below to start heading down to 1883. All right, so make sense about what we need. Like if we just continue to creep up, reject, that's higher risk sells. And then coming back below 1902 would be the safer sell point. Would only see these safe buy confirms. Otherwise, main bias sells. Does that make sense to everybody? You could just rewind if you want to see the intraday analysis. Okay, now GBPJPY. Overall, we on an intraday perspective, we had this long-standing bullish market structure in capital hungry that we played since after the coronavirus market crash. After the market crash, and like mid-March, when central banks started to flood their economies and provide stimulus, and we saw more quote unquote optimistic markets, we had beautiful bullish structure on GJ where after a low was peaked, intraday highs would be created. You would get a pullback to a new high, and then this trend played out for at least a couple of months, right? Then, as sellers respected a higher time frame quarterly rejection point around 142 flat, and we had coronavirus fears start to creep back into the market, as well as Brexit uncertainty at that time, we finally had a break of that structure, and intraday lows created by sellers, and a shift in structure to bearish market structure. Okay, so now it did look like we were still going to have some bullish potential with the Brexit optimism and break above this bearish market structure and show more buyer strength. But now when we start to zoom in here, we can see there was not enough buyers order flow in the market to break above these previous intraday highs. Okay, so what we had follow up from that was an order block in an area of price sensitivity created, showing us exhaustion by buyers, and then a break of intraday bullish structure and lower time frame bearish structure developing now, with also Japanese yen strength from global market uncertainty and fear picking up, and the potential for weak UK data. So this, we just want to play our psychological price levels between the key ranges. 0.2 here. But what would be ideal for me for pre-London or London Open, even though we might not get it, we would need a break above lower time frame bearish market structure, which we will identify, would be if we come above 136.8 to get a pullback to correct some of this downside move to 137, flat round number and psychological price level, and then better risk versus reward sells from that point down to 136.5, where we've seen previous price sensitivity, and it's already a higher time frame historical price point. Okay, otherwise, if we do not get that deeper correction, as we are very bearish on GJ for the pre-London candle, which is in the next 8 minutes opening up, if we can get a retest of 136.8 and respect this lower time frame bearish market structure, which I will show you guys, then we can take some scalps down from 136.8 to 136.5. Okay, so now let's take a look at the 1 minute, and I just want to show you guys this current lower time frame bearish market structure that we are respecting. And one thing we want to note is that there is more Brexit uncertainty. Let me show you guys. There is more Brexit uncertainty as the talks are starting to turn negative. We do have the US dollar and Japanese yen picking up strength. We do have FTSE, the UK equities, fairly bearish. The only thing we want to make sure that can cause us some indecision is the UK retail sales, which is coming out in 7 minutes, and we will watch that release live to see how the data is, and the UK PMI figures. For those of you who do not know, PMI figures during these pandemic markets are very important. PMI figures for banks, economists, investors, smart money, whatever you want to call it, are economic indicators of the health of that economy's manufacturing, services sector, market sector, whatever it may be. Okay, most PMI figures are graded below or above 50. Above 50 is at least decent to okay data, and then if it's above 50 and above the forecast, it's very good data. And that's just the grading system for PMIs. Below 50 and PMI figures staying below 50 consistently shows potential for economic recession, and especially if other PMI indicators follow. Like if for a country, if you have its manufacturing PMI, service sector PMI, market PMI, all below 50 for an extended period of months, that is showing extreme economic weakness in that specific country. Okay, so these PMI figures have been in focus for investors to show the signs of potential economic rebound during these COVID markets, when so many different industries were shut down, so many different services were shut down, and so many different jobs were lost. So when these PMI figures are good, when they are solid, it shows market optimism, and we could actually get a shift in the structure here. Okay, what I would need for a deeper pullback when we're looking at the structure here, one is price to break above this lower time frame bearish market structure that we have just identified and come above psychological price level 136.8. If we could see some lower time frame bullish market structure, oh sorry, let me get rid of that economic points. If we could see some lower time frame bullish market structure start to develop, and a break above this minor bearish structure and a support created above 0.800, I could see that squeeze and pull back up to 137 if the retail sales data is good in, like, let's just say the next 5 minutes, and then to like possibly test this bearish market structure that we have identified on the hourly, or around 137.2. Okay, if the data is poor, which is sort of what I want, so we can continue sells, and then pre-London candle spikes up to retest 136.8 and fails to break this structure, plus that poor data, we're taking those sells down. Okay? Because Japanese yen is still holding strength. The dollar is still holding some intraday strength. We do have that Brexit uncertainty. We do have global uncertainty. And we just want to play that buy, and we just want to play that. Okay, so let me type that up here. Will gold go up during London session? This is market analysis. This isn't fortune telling. But you can rewind and see what you would need to take gold buys safely, or the gold analysis. You can rewind the stream. The chat mods will tell you that. The chat mods will handle some of these questions. But anyways, okay, so, and by the way, the white lines are historical higher time frame price points that have significant value over extended period of years, right? And the red boxes are psychological price levels, specifically on GJ, in between 100 pip ranges following the quarter point theory. The quarter point theory is that in between larger 100 pip ranges in financial or currency markets, buyers and sellers on the lower time frames react at quarter points. And on GJ, that has been back tested to be around 0.200, 0.500, 0.800, and 0.000. You will see great reactions to these price points. Like even when you saw this quick bounce at 0.800 after this massive sell-off, or you saw this rejections and resistance right at 0.200 and a higher time frame key level. But for scalp buys, break above minor bearish structure, okay? Break above 0.800 ppl, strong retail sales data, which is in 2 minutes. Because we are starting to get some reaction just at this low point here. So if we come back above, we could take that 20 pip squeeze as a scalp up to the 0.700 ppl. But we would need these confirms hand in hand. We would need a failure to break these lows, a break above the minor bear structure, a break above 0.800 as well, and then that positive retail sales. That is in about 1 minute, the retail sales. All right. Otherwise, that if we do not have that and the sales is bad and pre-London opens and retest 136.8, we're taking the sales down. But we still have a lot of time, okay? Remember, we're not going crazy because it's Friday. We're not risking any of our profits from the week. We're using proper discipline. If you guys don't remember this, bam. And this pullback would just be ideal to give us a better sells around 137 or 137.2. You know what I mean? So it looks like the data is good. Sorry, I didn't type that weird. About to come out. Pre-London candle just opened up. No, sorry, the data didn't even come out yet. I thought I was looking at Japan's data from last night. Retail sales 1.5%. It's good data. It's good data. We might get our pullback if these 1 minute lows don't break. Let's just look at the hourly quick. Data is good. It's 1.5. So hopefully we don't break these lows and we can get a pullback. We're not taking any high risk buys at the current price point. We would still wait for these confirms, all right? So let's just chill. Let's just let pre-London do its thing. I don't like how we spiked up almost to 0.800 and rejected. That's why we would need these confirms. And we still have the retail sales yearly, but that didn't get released yet. So that the yearly might be poor. Okay, so this UK ONS says retail sales, the yearly is bad. And the yearly is a bit more important. So we have mixed data. And you guys will also see the headlines to the left here. But let's just let the 1 minute play out. Let's just let it develop, all right? Because even if we want sells, I wouldn't want to sell here anyways. I would rather get a pullback to retest this lower time frame structure, reject, then sell. And you guys can see the information about UK retail sales to the left of your screen. So our main bias is sells. This is what we need for the buys because this would give us better risk versus reward sells. Otherwise, if we come to retest the structure in 0.800, We're taking those sales from 0.800 retest. The UK data was mixed. The monthly sales was good, but the yearly was terrible. Okay, so that's what we're looking for on GJ. Through pre-London or London Open is a pullback to retest this lower time frame bearish market structure in 0.800 and sells down from that psychological price level. We're only taking buys. We're only taking buys with these confirms. We're already one of the points the data is mixed. So we would only take scalp buys 20 pips from 136.8 to 137. If we break above this bearish lower time frame structure, we break above these 1 minute high where we just previously peaked and failed to break above, and 0.800 ppl. So if we broke above, had a support formed and some lower time frame bullish structure develop, we would take that 20 pip squeeze up and then watch reactions at 137, see if we can squeeze it up again another 20 pips, and then take those intraday sells from there, where we are looking for a retest of this bearish market structure. $137.2 J would be like ideal sells if we fail to break above there for a deeper pullback in like an intraday play. I'm just looking for some potential scalp plays, 10, 20 pips with some confirms here. But our main bias is GJ sells if you just rewind and look at why. Because currently US dollar and Japanese yen standalone are holding strength, which shows us more overall market fear as investors are putting money into these safe haven currencies. UK equities is fairly bearish when you're looking at the FTSE 100, UK 100, as well as global equities overall are starting to show some exhaustion, and we still have the Brexit uncertainty and a lot of global uncertainty around COVID. And this UK data was fairly mixed, as the monthly data was good, but the yearly oh shit, what the hell? Did they revise the yearly? Oh, never mind. Yeah, but the yearly sales was poor. Wait, no, they just revised it. This might go up if we might get our scalp confirms. Remember the retail sales was just bad. See, what the hell? UK retail sales monthly was 1.5%, right? UK retail sales yearly was 3% here at 201. So it was 0.7% below forecast, but now they just revised it to 4.7%, the yearly. So it's amended data and it's 1% better, right? So hopefully that gives a bit of a boost to some GBP investors and we can get that buy squeeze. But otherwise, price action, we're still going to observe price action and market structure. But that UK data has been revised. We would still need these confirms for our scalp buys anyways. Otherwise, we're waiting for that potential retest and down. Because these guys are talking about some of the negative comments as well regarding UK economic growth to the left of your screen here. Okay, so let's keep an eye. That's what we're looking for on GJ. This is the safe buy confirms. Otherwise, we would want a pullback and then continued sells down to 0.500. This is what we're looking for on gold. Main bias is sells if US dollar strength continues, but ideal sells would be a retest of 1912 if we could. As you can see, we are respecting this lower time frame bullish market structure we identified on a dime. We just didn't break below it yet, so we're still in this wedge pattern and through the corrective action. As it's still only pre-London, we still have an hour till actual London Open and hours till actual like London session gets riled up to close the week off, plus those PMI figures. But this is what we need still for gold. This is the main bias is sells if US dollar strength continues, which it does look like it is going to do. Let's just zoom in more on the US dollar. So we're watching from an intraday perspective. US 30. Oh, the US 30 is coming to the sell point. Good call, CJ. But yeah, US30, because even though we had this strong bounce of 28K, as we do have a lot of uncertainty around US coronavirus stimulus talks, the US debate, Trump did say that Nancy Pelosi does not want any deal and she's making it really difficult. And we do have the US dollar picking up strength, where that inverse correlation has been more prominent of when the US dollar is stronger. And the safe haven currencies are stronger. Of course, equities start to soften and weaken as investors are moving their money to keep it safe. So I was looking at a break of these lows. I was looking at a break of these lows to start taking down the ranges. Watch first initial reactions around these previous price sensitivity points. And then if we break below that and retest, take it right back down to 28K. But yeah, good reminder, CJ. You already saw what I was showing at the start of the thing. UCAD. UCAD, I'm looking for buys at a break and retest above 1.316. We do see some lower time frame bullish market structure developing. Higher risk, higher reward buys is if we get a pullback to this restructure and then come back above. And this is primarily playing on US dollar strength. Of course, we could see that sellers struggled around previous low points and we had some intraday bullish market structure developing. And then as we had that uncertainty around US stimulus, US elections, and overall global markets, we had the US dollar pick up strength. And now if we get a break above this bearish market structure, a break above our higher time frame key level and retest that, we can start taking scalp buys and intraday trades up. Okay? So let's just keep it on the 1 minute as we already have our areas of interest marked out. We would only take safe sells. I'm just going to write it now. Dixie turns bearish. Oil bullish, as oil and Canadian dollar have a positive correlation. Good job, CJ. Break below bullish structure identified. And 1 minute. Break below bullish structure and break below 1.313. This I would see safe sells. Otherwise, even if we get a bounce here or break and retest. Okay. Gold looks like pre-London is failing to break previous 1 minute highs and price sensitivity area as well as bearish structure. If we get a break below this bullish structure and come below 1902, we can start to take those 50 pip sells down to previous lows to revisit those previous lows as well as 1897 higher time frame key level. So keep an eye on gold. We'll just zoom in on it a bit. GJ is just messing around a bit. And EU. So EU, I do see the potential for us to come retest this broken bear structure, previous price sensitivity area, as well as the bullish market structure, as German DAX is still fairly flat and Euro stock market is fairly flat. And of course, the US dollar and Japanese yen are holding strength. US dollar is going bullish right now as we're looking at and about to break out of this range. I don't want to jinx it. So our main bias is EU sells. Now, what would be ideal I was looking at was, of course, if we failed to break these 1 minute lows and come above this minor bearish market structure from this peak sell point to the secondary drop base point, I could see buys to a retest point of 1.84 for better sells with those confirms. But otherwise, and then anyways, with those, with even if we did get that buy squeeze up of about 35 pips, I'm just looking at for better intraday sells to possibly run through late London and New York, right? Just to reject that bearish market structure and key level and then run it down. But right now we are seeing it respect lower time frame bearish market structure. We are seeing sellers in control as the US dollar is strong and more sellers impulsive moves, and this just being liquidity being generated for like a base drop. So obviously our main bias is sells. At this point, as we miss some of these retest points, just down the range of about 25 to 30 pips would be a break and retest of this structure and then run that down. Or of course, coming back to retest this price sensitivity area and run that down. The only thing you want to keep an eye on is that Euro PMI from 3:15 till 4 a.m. Eastern. We have Germany PMI. We also have France PMI. France PMI is first at 3:15. Germany PMI is at 3:30. And of course, Euro overall PMI, market service, and composite PMI is at 4 a.m. Eastern. So of course, if this data is very strong across the board, it can give us that deeper pullback to possible better sells for New York session if the US dollar continues strength. Okay. This is more like a wick. We are seeing a potential break of this structure. Would be ideal for London Open because we do see a nice little order block around this area that we come back and retest that, then make our way down. I would only see safer buys above these 1 minute highs and the bearish market structure. I was just more identifying this as sort of like a wick and this as the lower time frame structure, as we had a very strong snapback in price. So during New York, we did have some bullish market structure just as the rebound and corrective action of 28K. But we are noticing exhaustion by buyers, failing to break previous 1 minute highs, price sensitivity, and seller order flow coming into the market, failing to break above bearish market structure on an intraday perspective, and now having a cleaner break of that bullish market structure and breaking those 1 hour candle body lows. So if you already entered, we were talking about the start of the webinar, you're probably already up like 40 pips. So let's watch that. The SL points are going to be dependent when the trade's actually set up based on the lower time frame market structure, and dependent if we're looking for a scalp or if we're looking for intraday style trade. If we're looking for an intraday style trade, I usually run a 20 pip stop loss dependent on last structural points, and of course a 60 pip to 80 pip take profit. But if we're looking for scalps and we're looking to take 10, 20, 30 pips profit, I usually keep a tighter stop of like maybe 5 to 8 to 10 pips, but then try to move it break even as efficiently as possible. Because when you're scalping smaller ranges and in a very fast potential time, in a very potential fast reaction, like especially during high volume times, you want to protect your capital. So I'd rather get taken out break even and lose no money and look for a potential re-entry, because there's so many different scalping opportunities available for those 10 to 30 pip ranges through a 4 hour window, that I'd rather just protect my capital, take that break even, and find another better scalp entry, because I'd rather take like 1 or 2 pips of loss um, and then wait for that actual 30 pip squeeze that we get in our favor, because it's just more worth it that way. So it really depends what mindset you're in and what trading style you're looking for. If you're looking to take the trade and hold it through New York, obviously you're going to have a bigger take profit and a bit larger of a stop loss, as you're potentially looking to hold your trade for hours. But when we're scalping with the session volume, sometimes our trades play out within a couple of minutes. We get our 10, 20, 30 pips. So we just play with our stop losses according to that trading style. Where when we're scalping, we want to keep it more, we want to keep it more, we want to keep it more efficient and protect our capital. Yeah, we had more negative headlines. You're an XCH member, so you don't got access to the newsroom, but you should keep up with that. Boris Johnson was talking about how there's still no progress with the talks, and we had Japanese yen strength come through. Without CH, the X members get lost. No, I'm kidding. US and UK markets. Yes, the markets, the equity markets and the currencies are different entities, right? They are different entities. The currency itself versus the actual stock markets in that respected country, they do not have a direct correlation. Sometimes you can have the equity markets be very bearish, but the actual currency still have some strength, right? Okay, so everybody understand what we're looking for on gold. Main bias is sells. We would only take safe buys if we got all of these confirms and we started checking it off, right? But we do not have any of those confirms yet. Otherwise, we are looking for, if we do get a deeper pullback at London, for prime sells at around 1912 key level reset, where we can see we'd retest previous lows where we had this impulsive move and our higher time frame key level. Or we're looking for a break and retest below 1902 where we saw some previous price sensitivity and reaction, and it's our, of course, historical point key level. So if that comes closer to 1902, or if we do break above these 1 minute highs and we do break above this bearish structure, if you want, we can take that 45 pip squeeze up to retest 1912, but it is more negative. It is more it is more risky going against the current bearish sentiment, as we do have that US dollar strength, that Japanese yen strength. Equities are fairly flat right now. UK equities, US equities are in bear structure. German DAX is fairly flat. Australia is not too bad. Bro, just because you spammed Euro NZD 3 times, now we're never going to look at that trash pair. USD CAD, we're either waiting. We have some more Brexit talks live. Brexit, UK Chief Secretary to the Treasury says hopes for a deal. Brexit, UK Chief Secretary says both sides interested for a deal. Like, shut the fuck up. They're trying to bring some optimism. But let's just see if that. I don't care if they bring those little optimistic comments if it gives us our pullback to 0.800. Man said Brexit news always plays with the SL. Best thing to have is not have a SL. That's terrible. I do see the potential for U.S. markets to take a hit, especially before elections coming up and with a lot of the uncertainty we've been seeing. No, I would go long after it takes a nice dip, because we are pretty much. I know US 30 we already rejected like 29, but we are pretty much at we are pretty much at back to highs prior to COVID crash, right? Like I think when we crashed from COVID, we crashed from 29K, no, all the way down to 18K. We pretty much came back to a full V-shaped economic recovery. So I would personally prefer some more fear and uncertainty on a mass global level to give equities another dip on the higher time frames, and then I would rather buy the dip following that historical performance from that point. You get what I'm saying? Just because it's better risk versus reward for us and a better payout. Thank you, Sav Sav. Much appreciated for your feedback. Okay, now that it's pre-London, we've already discussed some of SPX. SPX. I don't look at Nasdaq or SPX. I look at US30, but they all follow similar fundamental impacts, and they all have similar technical market structure as well. You know, that debate today was it wasn't as entertaining as the like it was more professional. They actually discussed real things, but the first debate was hilarious. Like when Trump was calling Biden's son a cokehead. It's so funny, man. These are the people running the country. Countdown 9 to 5. I do not think Brexit news is meant to manipulate the British pound. Actually, you know what I do? I was trying to give a more professional answer to it, but 100%, I think Brexit is the biggest mess and piece of shit ever. It's been going on since 2015. Every week they say they're hoping for a deal, and then all of a sudden they say no deal, and you have massive market moves. Not massive market moves, but on an intraday perspective, you get 100 pip moves within minutes, right? So I do think, yes, a lot of this Brexit uncertainty for the last period of years, some of these main swinging headlines are just pure manipulation because there hasn't been any actual progress made with Brexit, right? Yeah, it's been a long time of a no deal Brexit. No, I already compounded that account, and then I got cold feet around 60K. And then I withdrew my money out, and but because Vantage is shutting down, and that's who I used to use for Canadian clients in November, I didn't want to take any risks, so I just keep a lesser capital amount, um, just to scalp an intraday trade to pay myself. So I'm going to be moving with Owanda and then depositing a higher amount to, of course, continue compounding to potential financial freedom down the road, years down the road, you know? But because Vantage is getting out of Canada and stopping supporting Canadian clients, I had to cut that short. And I don't think Canadian clients are going to have 1 to 500 leverage in the next year. So I'd rather just go with a properly regulated broker like Owanda. It's just gonna suck going to 1 to 50 leverage, but that's just a part of the game. High leverage also does seduce people or induce people to want to over leverage and trade more and make their money faster. So it is a double-edged sword using really high leverage, especially giving high leverage to any Joe Schmo with like $100 or $1,000, $500 who has no prior trading experience or financial market knowledge. And if they're just following like what they see based on social media in our trading communities, they're probably just going to follow signals, account managers, marketers, and then they're just going to spend their first period of time just just failing and trying to over leverage and trying to make such fast money because they see all these marketers making thousands of dollars in all this, right? 1 to 500 leverage just for Canadian clients due to Canadian regulations around forex trading leverage, and specifically Ontario clients because due to the Ontario Securities Commissions. So I don't know about I don't I'm not saying 1 to 500 leverage will be gone for everybody. It's still very much available for other parts of the world. It's just due to Canadian specific regulations. But 1 to 500 leverage is honestly very dangerous for new traders. Very dangerous. Owanda only has 1 to 50 leverage max. No, I do not use magic keys. Yeah, Owanda's 1 to 50. So yes, It's better because it's a regulated broker. It's 100% approved by all Canadian authorities, right? And it's safer leverage. It just sucks because I've been so used to 1 to 500 leverage. But 1 to 500 leverage is that double edged sword because as a new trader, when I was a new trader 3 years ago, I went through that same journey that a lot of us go through of just depositing amounts and just crashing it, like going depositing 200, depositing 500, depositing 1,000. And because you're looking at these other influencers, these other marketers, and everyone advertises making so much money so fast, and you're a new trader who has no experience or knowledge or understanding of the how this is a game of probabilities and it takes years to grow your wealth, all you end up doing is over leveraging and over trading because you want to chase that so badly. You want to chase the money so badly. And we all know that just ends up in massive failure, massive depression, tons of money lost and burning accounts, and then blaming the market and blaming mentors, blaming everything else except for yourself, right? But when you understand that this is a game of probabilities, a game of risk management, and it takes years to grow your knowledge, to grow your skill set, to grow your capital, and that it's a slow journey you must appreciate, just like anything else, just like working out, just like if you want, for example, you know how they say, you know how everybody always says that generic thing that 99% of retail traders fail, and this is like some big fact. 99% of people fail when achieving greatness in anything. Okay, please understand that. If you want to achieve greatness, okay, what is greatness? Let's say greatness is either being very well known or famous for a particular skill set, or making massive monetary gain for that skill set. Let's just say in our modern world and society that is quote unquote greatness, right? If you want to achieve greatness in any particular industry, 99% of people will fail that. For example, if you want to be a professional soccer player and play in like the Premier League, whatever it may be, or you want to be a professional hockey player, a professional basketball player, right? Only a very small percent make it to the NBA, make it to the professional stage of, you know what I mean? Or if you want to start a business, you want to start a restaurant, it doesn't matter. You still have to stick with your business plan. You still have to manage your expenses. You still have to be consistent with it, disciplined with it, because out of 100 restaurants, 95 of them fail. Out of 100 businesses, 99 of them fail. These are facts around every single industry. Okay? So understand that it doesn't matter if it's trading. If you want greatness in any aspect of life, most people will fail, and it takes extreme discipline, consistency, and development of your skill set and knowledge base to get to that point. I'll tell you guys a great story. Okay, this is about a hedge fund trader in the U.S. because we're waiting for these trades to set up anyways. If you guys have questions about the chart, I'll gladly answer any questions you guys have. Right now, we don't have too many significant headlines. Some of our fundamental points are still valid. We're waiting for the EU PMI figures during London session. UK retail sales was particularly good, right? And just keep in mind some of your stream reminders and your mental reminders, okay? But now, let me say a story about this hedge fund trader from the 1940s in the US, okay? And he wasn't always a hedge fund trader. He just started out as a regular singular investor over a 10-year period. Because remember, in trading, it's not one of the big failure areas in trading that a lot of people have is that we are all used to getting paid for our time. Please keep that concept in your mind. Okay, we are all used to the concept that we get paid for our time, that if you go put 8 hours somewhere you will get X amount of dollars, right? We are all used to that concept, paid for time. We are not used to getting paid for a skill set. Trading is getting paid for a skill set where eventually it can compound to 10 times, 20 times, 30 times, 100 times more than you will ever get paid for your time. Okay? So, an example of this, there's only a set amount of money you can make working a career and getting paid for your time. As long as you have a boss, yeah, you might get a 2%, 3% raise a year, but what is that really? right? You're not getting really paid for your effort or your skill set. Even though you get hired based on your skills, you're not getting paid for your skills. You're getting paid for your time. You're getting paid to follow tasks. You're getting paid to do the job you've been given. Okay? Too many people carry that mindset over into trading. And they think that because they spend so many hours in the chart, because you can take so many trades, because they're watching the charts for so many hours looking to trade and make money, that they should be making more money. It's the opposite. The more time you spend actively trading, not studying, not developing your skill set, the more time you spend actively trading, the higher probability you have of losing due to human inefficiencies and natural human weaknesses and errors. Okay? So just keep that in mind. That trading is not a game where you get paid for your time. You get paid for your skill set, your patience, your discipline. All right. So now there's a story about this hedge fund trader from the 1940s in the US. His first 10 years of trading, and give or take inflation because this is the 1940s, his first 10 years of trading, not 1 year, not 1 month, 10 years. He took $10,000 to around $60,000 or $70,000. Okay? So that means roughly every year he earned less than $10,000, which was well below average or whatever you want to call it. If I went to any of you, if I went to any of you refugees in the chat and I said, "Hey, I can teach you how to trade. I can teach you everything you need to know. And in the first 10 years of your trading, you will earn $60,000." All of you would tell me to go fuck myself because all you're looking at is the time. All you're looking at is that in 10 years, you can earn 60K. That's not worth your time because you're already getting paid at a job where you make 40K in a year or 50K in 1 year, right? So most of you would quit from that point or not even want to pursue that. So this hedge fund, this trader, for his first 10 years of trading, he only took his capital from 10K to 70K, right? But what was forgotten or what was neglected by a lot of people was in that 10 years, he also gained 10 years of knowledge, 10 years of experience, 10 years of backtesting the market, studying, learning about himself, etc., etc., right? The following 10 years, he took his 75K to 500K. 10 years after that, he took 500K to 5 million. 10 years after that, he took 5 million to 50 million. So pretty much 25 years down the road, he was already a millionaire. Now, if you look at his 30 years, 40 years of trading, he developed a wealth and started running a hedge fund with other people of around managing $400 million. Now, will any of you with your 40K a year salary ever get to $50 million, $100 million, $500 million? Will you guys ever get there with your regular salaries, just working every year? Would you ever be able to save that? Probably not. But everybody else also would not struggle that first 10 years. They would not want to only make 50K in their first 10 years of trading. They would say that's not worth it. They would quit right then and there because trading, you do not get paid for your time. As his skill set developed, as his knowledge developed, as his wisdom developed, as his experience developed, that's what we had. That's what he got paid for. Elliot, this isn't a stock trading chat. Nobody's putting Facebook puts. And we've already done our trade analysis of what we're looking for. All right. It's actually technical and fundamental analysis. But yeah, we've already done our analysis of what we're looking for. Main bias on EU is sells. Main bias on GJ is sells. We're just waiting for a pullback to retest bear structure at 0.800. Gold, we're still rejecting around the bullish market structure. We're waiting for the sells below 1902, otherwise around 1912. But yeah. And UCAD, we're still waiting for these confirms as well. Dow Jones is dropping nicely. For anybody that took the sells, you got about 50 points. but we're still waiting for the potential retest of broken bullish structure in this order block on the lower time frame, as well as intraday bear structure to take those sells down, right? So yeah, so you guys have to understand, too many people carry that mindset over of thinking they should get paid for their time like that. And most people, if I told them, hey, I can teach you how to trade, but your first 10 years, you're only going to make $60,000. Let's just say, give or take inflation, that's $100,000 now. All right. If I said your first 10 years you're only gonna make $100,000, aka 10K a year, all of you would tell me to go fuck myself. You would say it's not worth it. You would say you don't want to do it. But if I said after 20 years you would be at multiple millions or a millionaire, then you might start thinking. Then you might go, wait a second. If I say after 30 years you'd be at amassed wealth of 50 million, 100 million, you go, okay, fuck yeah, I'll do that. It's all a mindset. It's all just about putting in that time and effort and developing the skill set, right? So let's just look at some of these headlines. Of course, some of the UK retail sales were corrected and the data was a bit stronger. So hopefully once we just created this lower time frame support here, we'll get our pullback to 0.800 for possible sells down. Yeah, you'll be dead in 30 years. The only thing promised in life is death. We'll all be dead. We'll all be dead in 30 years, 40 years, 50 years. But I'd rather live a life of pursuing a passion and trying to refine myself physically, mentally, financially than, just waste my life away with regrets and feeling sad, depressed, eating like shit, drinking, smoking, and just being a trash human. I'd rather not have those regrets when I'm on my deathbed. The only thing promised in this life is death. So you might as well work your ass off at whatever you want to, because we're all gonna die. Nobody on this earth knows what we're truly meant to be doing here, and nobody can tell you any different, because we're all humans with the same amount of confusion. We all have anxieties, we all have fears, we all have doubts, but it's all about how you use those feelings. Just like in our modern society, convenience and ease is what is sold, and everybody is sold these quick dopamine hits, whether it's from social media, whether it's from eating some junk food or having some alcohol or taking a drug. It's all just these quick dopamine hits where everybody is afraid to feel anything else, or they can't handle feeling sadness, they can't handle feeling anger, they can't handle feeling depression, they can't handle feeling anxiety, when these are emotions you are meant to feel just as much as much as you are meant to feel happiness, right? You are meant to feel these emotions, and everybody has these emotions. It's just all about how you use it to your advantage, or if you just let it consume you and do fuck all. So if we do break above 136.8 and these previous 1 minute highs, of course, we will take these scalp buys for 20 pips with these confirms up, because then we would have a failure to break these 1 minute lows pretty much in this price sensitivity area, which we can confirm. We would have a break above minor bear structure. We'd have a break above 0.800 price level, and we did have strong retail sales data for UK. Okay, so if we do break above 0.800, just watch so we can take that 20 pip squeeze up. So let's watch price action here around 0.800 accordingly. Gold is just playing around within the wedge. We're still either looking for better risk versus reward sells around 1912. US dollar, we do want that move to the upside to show us that market fear with the US dollar and with the Japanese yen. Safe sell option labeled here. What time is it right now? It's 2:42 a.m. Eastern. We have London session open in 18 minutes, and then the first round of Euro PMI figures with France market manufacturing, service flash, and composite flash PMI. These equities I do not trade. I do not trade the German DAX. But I look at the only equity or sorry index I trade is US 30 Dow Jones. But I look at global equities to tell me about investor bias. Sometimes you'll see different investor bias from like the Asian Pacific region, from Euro region to North American region, depending on what's going on around the world, right? But it's always beautiful when you see global equities across the whole world doing the same type of move. Like if I see global equities all extremely bearish, it's telling me that global investor behavior is more on the fear side. The sentiment is more on the fear side, so I can play that fundamental confluence of possible US dollar strength, Japanese yen strength, and Swiss franc strength, as we know those are our safe haven currencies, right? Those levels are on GJ specifically, and they are psychological price levels between larger 100 pip ranges that follow the quarter point theory, where it's been back tested that technically you see the reactions between buyers and sellers on the lower time frame, and more order flow entered into the market at these price points. And on GJ, it's point 0.5, point 200, point 500, point 800, point 0. Yeah, I'm just looking at the German DAX for an example of euro equities. You could of course just look at the euro stocks, but it's just like a preference of mine that I've always looked at Germany specifically. Of course, you could looking at euro stocks overall would give you a more macro perspective of euro. You can just message Krishy P on Telegram. Alex can send her username if you have any issues with the Capital Hungry chat. But yeah, let's just see these headlines. So the UK retail sales was corrected and that is actually a whole 1% stronger than initial release. French epidemiologist and government scientists, COVID-19 virus is currently circulating more quickly than back in spring. So we do have those fundamental points that we were talking about to bring potential more market fear, that last dot shot on the screen, which is of course the uncertainty that still lingers around global COVID. Candle bodies, not wicks. I look at the candle bodies and at which place you map out a buy zone and sell zone. Like these are the. Can you read this? So my GJ scalp buy confirms to go up to 137 for a scalp, not an intraday trade, not looking to take 100 pips, just a scalp through London session. If we have the confirms, would be failing to break these current 1 minute lows and price sensitivity area we are at right now, right? Breaking above this minor bearish market structure that we could see has been respected just for the last few hours or so. Coming above our quarter point and psychological price level, 0.800, and then we did have stronger retail sales data. So if we got a break above this structure, a retest, and another lower time frame support made similar to this, or just a quick retest and a bullish engulfing candle, we start developing bullish structure. I would take that squeeze up 20 pips to 137, watch the reactions at 137. Euro USD is a similar idea. If we might get that deeper squeeze and pullback to retest this price sensitivity area, but the same idea would be needed for buys. We'd have to come above these 1 minute highs and above bearish structure. The main thing I'm looking at is, as we've seen the US dollar pick up some strength short term from that market fear and from that global uncertainty, is that if it continues, we can play that US dollar strength and that Japanese yen strength sentiment. Of course, it can snap back into range and come retest 92.9, which would be ideal. If I can see US dollar, the dollar index, pull back and retest this bullish market structure and still respect it, then pop up, I could see higher potential for gold to give us this pullback. I can see higher potential for EU to give us this pullback, and I can see higher potential for UCAD to give us this pullback. Understood? So if we see the dollar does give us that pullback to retest its bullish structure accordingly, then we'll see those respective pullbacks on our US dollar dominant pairs, where of course we have the inverse correlation on gold spot against the US dollar. So we'd see the upward move, that pullback, and then the downside if we have US dollar strength come back into play. And then the same thing you see on, of course, and of course, EU, we could take that squeeze up above these 1 minute highs of about 18 pips. I'm just going to identify that here. So let me type out what we need for the EU buy scalp. For the EU buy scalps. Sorry, I was just talking about if we get, I didn't say much. I was just saying if we get the dollar to pull back to 92.9 and retest this bullish market structure, just for London Open, just to get better buy entry areas for investors and to do that liquidity grab for London Open, and we fail to break, I could see stronger potential of that pullback to 1912. I could see stronger potential pullback on Euro USD to take that 20 pip squeeze above 1.803, these 1 minute highs. And I could see that potential for UCAD to do the same thing as the dollar index, retest bullish structure, and then see what happens there. Macedonian. All right, Mac, I'll give you mod. I'm going to give you moderator. Thank you for showing up, Macedonian. Hey, everyone. All right, I'm just going to go to the washroom quickly. If you guys are enjoying the stream so far, send it out. Send it. He's drunk and coked out. If you guys are enjoying the stream so far, send it around to other trading groups. Let other people enjoy the value. We're just waiting for London Open, and in the next 10 minutes, that's why I'm just going to go to the washroom now and then see what London Open brings us. And then, of course, we will wait for those potential scalps. I am hoping we can at least get one scalp in, just to close off the Friday and then continue to talk about the markets. You of course got your real-time streaming news headlines to the left. You have your chart right in front of you. We're just going to keep it on GJ, and I'm just going to quickly label out the EU buy scalp confirms. Yeah, that moon lady. Yeah, don't talk. Yeah, we don't have to talk about other groups or anything. So we just got our session reminder in the trade room here. So these are the confirms to take that buy squeeze if we break above these 1 minute highs in the structure point, just for potentially London Open. So watch that. Let's get rid of these yellow lines for now. Looks like we might get it. GJ as well. Gold giving a deeper pullback, possibly going to go to 1912. If you do want to take that squeeze up 40 pips, you would have to wait for a clean break above these 1 minute rejection. What the fuck is this tool? You would have to wait for a clean rejection point above these 1 minute highs we have rejected multiple times, where that would also line up with a break of the minor bear structure. And we are respecting this bullish structure. And the US dollar is giving us that pullback. So let's watch this accordingly. this 137, right? That would be prime. And then watch for rejections there and take the sells back down. Sorry, let me put this back on the newsroom for you guys. And then I'm just going to go to the washroom. I'll be back in about 5 minutes. Any questions you guys have? Here's the quick stream reminders. Ask any questions about technical, fundamentals, and overall markets. Do not ask for direct signals, but I already give you guys enough signals. Any questions about the Capital Hungry private service, go to capitalhungry.com or message me on Telegram. There is the Twitter, my Telegram contact, the free Telegram analysis chat, and of course, please take the time and effort to watch the previous live streams and all of these different educational webinars, breakdowns, analysis, psychology webinars like normalizing losses, chart high episode with Raja Banks, Wicks Don't Lie. You have a ton of content here on technicals, fundamentals, macro fundamentals, micro fundamentals, psychology, and then of course Telegram free analysis chat, Capital Hungry, Twitter. Oh, you guys can't even see it because the thing was in the way. Capital Hungry, Twitter, Telegram, YouTube. These key fundamental points are still valid. We are, the US dollar is still holding some short-term strength, and we still have US stimulus talks showing little progress. Brexit talks are turning more negative, even though they're trying to give some positive comments with the hope of a deal now. And the US elections are in focus, uncertainty around COVID as well. Economic events, UK retail sales was positive. Yeah, we're good. MT5. But Vantage is shutting down. Yeah, they can see now. They can see now. So our main bias is sells, but we're looking for better sells. So keep an eye on these. This is safer long-term buys, but we can still take this scalp squeeze up if we get the confirms. US30 sells are playing out good. Equities are still looking fairly slumped. Remember, it's the end of the week. It's Friday. Don't risk your profits and go crazy and trying to be a hero. Tapping 0.800. It looks like we're going to break above, but we would need a nice little break and retest. Otherwise, otherwise we're retesting bear structure and the psychological price level right now. So if we just get exhaustion here and come back below, then obviously, we don't have the confirms for those scalp buys. So keep an eye on that. And I just got to go to the washroom. Okay, 1 minute till London open. So you can see so those reactions, the assumption is first based on the quarter point theory, which is like a well-known theory within trading. And of course, through my own personal back testing technically over the last 3 years while trading GJ, you will see that on the lower time frame, you see the largest reactions at the quarter points in between the larger 100 pip ranges around 136, around 0.800, 0.00, 0.200, and of course 0.500. So now GJ had a hard rejection. This looks like it's going to continue down. We had a very strong reaction at 0.800, and that was following our main sell bias still. Remember, our main bias is sells. We would only take these buys if we had all these confirms. It would be ideal if we get another retest of 0.800 and fail to break higher. But let's just see how this gets absorbed, because this new London open hourly candle just created its lower wick and tested these lows, and we still did have some good retail sales data. So let's just see if we can break above here and still get our squeeze. Right here, it looks like we might get the break, retest, and then take that 20 pips up. So keep an eye on GJ now, and let's zoom in a bit more and actually watch the price action here and start dissecting the price action. Obviously, you can see this wick pretty much came down to test these candle body lows here and low points on GJ. We would need the break above 0.800 where we're reacting to right on the dot right now. You can see the beautiful thing about the 1 minute and why I like to observe it is because you can watch reactions, rejections, exhaustion, momentum, buyers and sellers strength the fastest. And in these trillion-dollar markets, you can see where price is reacting for a period of seconds, minutes, hours. Like this, even though we might break above higher or we might melt from this point, it's extremely interesting to me that we were just reacting to 0.800 there on the dot, right? So obviously, we're having some strong rejections here on the hourly still. Hourly candle just created its top wick at 0.800. Yen and dollar look like they still have the potential to go bullish now for London. London open candle on the dollar tested, created a lower wick and tested this support level. Looks like it can flip bullish now. But let's just keep an eye on it. It's only 2 minutes in, so let's just keep an eye on this and see what we get set up for us to take. And obviously, if we respect the structure and break these low points to create new lows, we're just going to extend it and look for a retest point to take a scalp down, okay? But I still think we can get this. Gold reacting at these see what I mean? How gold buyers are reacting exactly at this price point on the 1 minute highs, right? So that's why when people ask, will this break or will that break or will it go up? Why are you asking these questions of so much uncertainty where you have no control? If buyers do break above these 1 minute highs and we've come above this bearish market structure and we retest it, yes, we're taking those buys up. It doesn't matter if it's gonna if I think it will break or not. But yes, if the US dollar does a deeper pullback, if the US dollar does do a deeper pullback to retest this bullish market structure and does this downside move from an intraday perspective, I see the potential for gold to break above these 1 minute highs, retest, and we'll take that 45 pips up. Okay? So let's watch that more closely here as well. Zoom in, start looking at the price action. A nice retest of the broken bearish structure so far here. And then get that breakout. Let's just put, we can see we're still reacting here on the dot. So let's just watch it accordingly. GJ, okay. Let's see if we get our breakout of GJ. Retest quickly on the 1 minute, take that squeeze up. We did have our strong retail sales data. We did have a failure to break the 1 minute lows, even with the London Open candle. We failed to break those 1 minute lows. We are potentially getting the break of 0.800 and the break of bearish market structure. Now we just need I don't want to jinx it. We just need the clean break and retest, and we'll take that move up. But I don't want to jinx it. I don't want to jinx it. But watch that. I'm personally, no, I'm not taking any trades. I only trade Tuesdays, Wednesdays, and Thursdays as per my trading plan to also create discipline and patience around my trading and prevent over trading and being a greedy bitch. If you guys joined the free analysis chat, I streamed a lot of the days this week, and I shared any of the trades. Oh, sorry, I shared any of the trades I took in this chat. Some Dow Jones buys off the buy dips, GJ buy scalps we took on a couple of the streams. But yeah, I was done for the week after that point. Gold reacting to this price sensitivity area on the dot. Still want that clean breakout and retest of these previous 1 minute highs. We've seen a lot of sensitivity and reaction. Yeah, I get a lot better entries on the 1 minute with less drawdown, just because you're entering at such defined price points and areas of market structure. This week I made 4,500 rounded off. Okay, we're getting a nice clean break of 0.800. This candle's flipping bullish. We did have that stronger data and the potential to, of course, retest this bearish market structure, which we identified at the start of the webinar. So let's just watch the 1 minute to get a retest of 0.800 and potentially take that scalp to the upside. Your risk and what lots you want to use is dependent. Obviously, we have the main bias of sells, but we had this mapped out to get a potential deeper pullback. When people ask what lots they should use or any questions along that nature, you have to understand that all of our personalities, our financial backgrounds, how we were raised is all different. That is why trading is so unique, and you can never trade like anybody else. No matter how much you can copy somebody or you can try to learn their strategy or their system or trade exactly like them, due to such unique and different changes in our personalities, our financial backgrounds, just our lives overall, you will never be able to trade the same as somebody else. There will always be certain different factors of how aggressive you may be with your entries, or you know what I mean. There's so many different factors of like it's just too many to even name. Because the value of $1,000 to me and the value of $1,000 to you is a lot different. It might be similar, but it's probably a lot different. Maybe $1,000 you can wipe your ass with it and not give a fuck, but maybe I really cherish $1,000, so that's gonna impact your risk around it. Let's just tighten these zones up a bit so I can put it right at 0.800 here, which is right here, so we can get that so we can see if we get that retest. These were a bit too wide that they were covering too many pips around it. That's better because 0.800 is right here if we get that retest. That was a quick little retest, but hopefully we can actually dig a bit deeper. That was pretty quick, actually. That was close to it while I was adjusting the screen. But let's see. I know some people take the breakout entries or they put the buy stops. A lot of the capital hungry private members like put the buy stops and take the breakout entries. EU as well, also giving us a potential scalp squeeze up, potentially about 18 to 20 pips. We are getting the US dollar giving us that deeper pullback as we fail to break previous highs and are coming below the support level for now. I don't want to jinx it. I always do jinx it. we are failing to break previous 1 minute lows, even with the London Open. We are breaking above this bearish market structure and these previous 1 minute highs. So watch EU as well. Or if you're already in it, I just give the trade ideas and the analysis. When I'm trading, I take one of the setups myself. For example, like I was taking GJ, but I can't obviously look at every single chart every single second. So obviously, once the trade ideas are given out, you guys execute as per your risk and your capital management, risk management, your trading plan. But let's just see how it goes if we get that the deeper pullback. UCAD looks like it's going to give that deeper pullback potentially. We didn't get the safe buy confirms with the breakout above the wedge pattern and above the bear structure and above our higher time frame key level. Dow is giving us that pullback for London Open to around 28,380. But let's just see, because if equities, if markets are more optimistic, sorry, as yen is rejecting those previous highs, and as dollar might is giving us that deeper pullback, we could see equities push a little higher. But so far, UK equities, German equities are opening up quite bullish. UK equities are fairly bullish off that positive retail sales data that was revised, and GJ did do that possible buy confirms are setting up. France, just watch out for. Actually, this might help EU, but watch it if you're in EU because France PMI is coming out in 3 minutes. We're gonna watch that release live here. Manufacturing flash PMI poll is 51. Service PMI is 46.8. That's a very low buffered forecast. It's giving a lot of room for error there if it is poor because it's such a low forecast. 48 on the composite flash PMI. So it's like they're almost expecting poor data. That's coming out in 2 minutes, 50 seconds. We'll look at that. EU, yeah, that's why I said, because EU, with that data coming out, rather wait. Because now it's just snapping right back. That was dollar. Heavy snapback on the dollar. But let's just wait. Let's just wait. If you're, all I was saying is let's just wait the 3 minutes on EU just to see the data first. GJ, we want a pullback to 0.800 anyways, and then a possible support created, and get some lower time frame bullish market structure developing. So let's just see if we get that pullback there. Gold rejected exactly at those 1 minute highs. No buy confirms on gold just yet. UCAD, no confirms of higher risk, higher reward buys or the breakout buys just yet. EU is just retesting that broken bearish structure, but let's just watch. EU might range because we have the France data right now in a minute, then the German data in 15 minutes, and then the Euro overall PMI 30 minutes after that. But it's looking pretty nice if we get these confirmed still. Looks like it just retested structure, but let's see in about a minute 22 seconds. Just wait, Ahmed Abdi. Ahmed. Yeah, just wait a second. Because if this data's good and we come back above these 1 minute highs in that buy area, because it only went like what up? It only went up and down like 5 pips right now. GJ is reacting to this price sensitivity area to the left, as we had a lot of noise here. I would like because we are in a main GJ sell bias, but we're looking for optimal sells at 137. You know, that was a nice 15 seconds till this report release right here. On forecast, worse and worse. That's not looking too good. France is pretty shitty right there. That might cause some uncertainty in the markets as well. GJ though, how can I learn about the quarter point theory? You could just like Google the quarter point theory. It's a common thing. New 15-minute candle. EU also is coming back above. Oh, they revised it. It's not bad. France is not bad. So EU's looking good too, especially if we break above these 1-minute highs. The market manufacturing was on par. The service was 0.3, while the other one was 0.7. That's not bad. GU's looking cleaner. Dollar, come on, dollar, melt and give us that pullback. Break these lows. We're just reacting right at these previous 1-minute highs though. So if you did get a 0.800 entry, just keep yourself risk-free, just so you don't risk losing anything this Friday, because we rejected right at that same price point. EU as well, rejected right at that same price point. So if you do have an entry, just watch your risk so you don't lose anything on a Friday. And because it's only 15 minutes into London session. You missed EU buys? Nothing. It only went up and down 7 pips. You didn't miss that much. It would have been more confirmation to like see it would have been more confirmation about GJ to continue the move up if that 1-minute bullish engulfing candle closed above this price sensitivity point and where we just peaked. But the fact it closed there on a dime um, isn't the best reaction. So that's why I said, just if you have a 0.800 entry, just leave it risk free so you don't take a loss right now, and then we'll wait for potential re-entries. Because if we get that lower time frame support formed and fail to break below, it still looks good. We are developing some minor bullish structure here. UCAD buys, I'm either waiting for the pullback, Joe, to around 1.3133 to retest this bullish structure on the lower time frames from this peak buy point, or at a breakout of the bearish structure and a breakout of the higher time frame key level 1.31600. Yeah, I'm primarily watching because if dollar doesn't break the support, it is just grabbing liquidity to do a breakout move to the upside. We're only looking to take the EU buys as a scalp with the inverse correlation of just looking for the dollar to do a pullback to retest structure and then continue up, right? Just because we've had some exhaustion here by buyers at this price point. So usually when you have exhaustion, there's only two ways to generate more order flow in the market for a breakout. You either get a pullback and buyers enter from a more appealing price point, or you get a consolidation and then fail to break lows and then the bullish breakout following the current trend. So I'm just watching that accordingly, because if we do break below this minor support and the US dollar does give us that pullback, even this intraday move from like 93 flat down to about 92.9 would give us that EU squeeze up, right? But right now it's just messing around, so it's best just to stay out of EU for buys because I rather notice US dollar give us that pullback and break these candle body lows first on the hourly. If we break these candle body lows, then we have that higher probability for that deeper pullback. EU buys would also make more sense. But if you're in it, just watch your risk accordingly. The one good thing about EU while you're scalping it is that the spread is very tight. So if you did get that breakout entry or that retest entry, you can like manage it so to have a very favorable like small loss, very tiny loss. You know what I mean? GJ is looking good. Like we made the support at 139, at 136.8. We failed to break lower. We didn't like retest it down. We're getting these confirms. We failed to break the 1 minute lows. We broke above minor bearish market structure. We broke above the 0.800 psychological price level and retested it. And we had strong retail sales data. And we're trying to take it from 0.800 up to 37, 137. But right now, you're already up like 10 pips on GJ. So that's how we do it in Capital Hungry as per developing the confirms. And if you guys were watching from the start of the stream, we were already like road mapping it out what we would need, right? So anybody take that? Anybody in the private chat? You guys take that GJ scalp? Obviously, I'm not trading. That's a nice. Right now it's still up like 12 pips. So I would secure as a scalp. I would secure this and leave a runner. Have we lost yet on these streams? I don't think so, man. EU just I'm a bit more iffy because the US dollar and how dollar's still messing around here. UCAD is giving us that deeper pullback though, so it looks like EU should continue up. But the one thing we were saying is be careful with Euro because we still have German data in about 8 minutes, the German PMI and then the Euro PMI. Okay. So if you entered at 0.800 breakout, or if you entered at that retest support here, and you're up 15 pips, just secure some, leave a runner. We are probably gonna head up to 137 right now. I need some W's in the chat. I need some subscribers. I ask for the likes and subscribes after I help you guys make money, not before. All right. See, Callie, you just made the Capital Hungry private chat monthly fee in one scalp trade. So imagine what everybody in the private chat does when we do this 5 times a week. When we will do it 5 times a week. And remember, guys, this is Friday. Don't over risk it. Don't go crazy. Alexander, did you guys catch this? You got GJ, you got GU, you leaving a runner, high risk bull, GU scalp. All right, good shit. 15 pips, 15 pips. That's a scalp. Remember, we're in the scalper's mindset when we're looking at it right now. No, I was talking about for our private chat. We have like a private chat. Secure, leave a runner because we are seeing some lower time frame bullish market structure developing, so we could get a deep retest of it, maybe through New York. But just secure 15 pips, leave a runner. Did we get all of these confirms? Yes or no? And was it beautiful? Yes or no? Did I not? I don't want to say I'm giving signals, and I don't want to say I'm trying to make it look easy. But did we not check these off? So who was here since the start of the stream? Did we not roadmap exactly what we were looking for those potential scalps? Did we not pre-plan it? Did we not create our confirms of what we would need and start checking them off? Did we not observe the price action, create our ranges, right? By the book. That was by the book. Exactly. Yes, I do the same thing. But yeah, we secured anyways now because remember, we have some German data coming out in 4 minutes. That's why we're staying out of Euro USD. We're staying out of Euro USD just for now because Euro is having a bit of indecision until this data comes out. And then if you left a runner, just leave a runner, secure your 15 pips as a scalp. What our scalp buy confirms were a failure to break current 1 minute lows. Okay, yes, technically we failed to break current 1 minute lows, but what is that telling us about the charts? What is that telling us about buyers and sellers strength? We have this very strong, we have this lower time frame bearish market structure, correct? When which is telling us that sellers are in control as you're having lows printed and sellers impulsive moves, right? But when you're having previous lows failing to break, and especially as well with the London open candle and volume coming in, this is telling us that sellers are exhausting and starting to close off some of their order flow. Okay? Now, what shows us after that? What do we have that was our following confirm? A break above the minor bearish market structure. What does that tell us about the buyers and sellers strength? What does that tell us about the momentum? It's shifting as this is showing us sellers exhaustion. Breaking out of the bearish structure technically and above our 0.800 psychological price level on the lower time frames is showing us stronger buyers momentum. Then getting the retest of these previous 1 minute highs and the psychological and the bear structure and having this flat candle body support made is showing us more buyers entering the market here. And where do we just head up to? 137. The following psychological price level following the quarter point theory for GJ. Fucking beautiful, right? It's just fucking beautiful. It's beautiful. It's beautiful. EU, if you're in, you're still safe. We have the German data in 2 minutes 50 seconds. Gold still did not break, and see how gold is reacting right at this bearish market structure that it did break out above. Yes, we have a bit of this range right now between these 1 minute highs and price sensitivity area, as well as a break of the bearish structure and that lower time frame support. So we still need a break above these 1 minute highs, and a similar idea we just did with GJ for that retest, and we could take 45 pips up on gold. But we need the dollar to do that full pullback. If the dollar does that full pullback to retest this structure, and especially if this German and Euro data is more optimistic, then we will get that EU squeeze up. Then we'll get that gold squeeze up, and gold will give, and UCAD will give us that full pullback to retest lower time frame bullish structure here. All right. France's data was fairly mixed. EU, we're just waiting for the German data now. Even if the German data is good and it gives an impulsive move up, there will be a retest if we patiently wait. All right. So we're gonna round that off and say it was a 20 pip scalp call. We'll just say 15 and 20 pip scalp call. And we also got the strong retail sales data as with that fundamental confirmed because it got revised, right? The retail sales, it initially came out worse, and GJ was starting to fall a bit, and then this means the data got amended or revised, and it was actually 1 full% higher. So both the monthly retail sales and the yearly retail sales were good. I wouldn't sell at 137 just yet. Just because we have this new 30-minute just because this 30, I know we're still in that bearish sentiment, but let me just move some of this out of the way. Just look at this. We are still very bearish on an intraday perspective and in that main bearish bias, right? Because we do still expect GJ. We do expect GJ to give a pullback of this bearish market structure. right here. But this could squeeze up to about 137.13, 137.2, and this is quite a bullish 30-minute close, okay? I would need a bit more rejection at 137 and signs of seller's exhaustion. This 30-minute candle did just open bullish without a lower wick, so it looks like it just squeezed up to 137 on the dot right now, and then it can potentially flip, grab liquidity, and then turn bearish. But W's in the chat for the buy scalp. I want W's in the chat. We haven't lost on these streams yet. I would close those buys just because this 30-minute doesn't have a lower wick, but that's a nice squeeze. The W's are the funniest. Now we can say it's a clean 25 pips. German data is good. German data is good. Oh shit. Anybody hold EU? EU. W's in the chat. W's in the chat for EU. Double. Sorry, I wasn't paying attention. German data is good. German data is good. 58, 54.5, 48.9. Very nice. So, similar idea. Failed to break the 1-minute lows, which is showing us sellers' exhaustion, right? Break above the minor bearish market structure and break above the 1-minute high points, which is showing us buyers' momentum. Retest of that point in a lower time frame support form, showing us more buyer order flow entering the market. Then you get that squeeze up with volume. Oh man, oh man, oh man, I make it look so easy. No, I'm just joking. We mapped it out though. We this is what we already pre-planned and predetermined. Brexit uncertainty has made GJ very messy, where it's not impossible to intraday trade, but it can be extremely stressful and annoying because like we are humans with emotions, and it's a very annoying when you can be up 100 pips on GJ and then a Brexit headline comes out and you're back to break even, right? So like that's extremely fucking brings you stress and anxiety, and you're just and changes your emotions. You get what I'm saying? So can we confirm that we called a nice 25 pip scalp on GJ, 0.800, 20, and a nice 15 pip scalp on EU? Can we confirm that so far? We'll say that. Can we say that? Can I say that? Can I say that? I can say that now. No, there we go. That's a good scalp though. Friday, beautiful Friday. Did the other London streams take any trades yet? Or are they still waiting for the 30-minute candle close? I'm just joking. GJ 25 pips. EU 15 pips. As a scalp, that's 40 pips. I don't know. I just checked on the streams because I didn't see anybody take any trades yet. That's why I was just joking around. Did they? I unless the stream was lagging, I didn't see them take any trades yet. That's why. Gold, no safe buys yet until we break out above these previous 1-minute highs, and then we get that retest in the 1-minute. The good thing about the 1-minute, for example, like on GJ or like on EURUSD, is like you don't have to wait for like 15-minute, 30-minute candle closes, right? You can see the reaction. I know I was just joking around. You can see the reactions that buyers and sellers reactions at the different areas of like market structure, psychological price levels, areas of price sensitivity. See, yeah, we had a feeling that Dow Jones was going to break higher. That's why we stayed out of that one, because equities were looking more solid. So we wanted the retest, but what But once we saw that equities are looking more solid, it made sense that I was going to break out higher. So we stayed out of Dow Jones. We didn't take anything on UCAD, but it did do that. It did do that pullback following the yellow magic lines of 20 pips, as dollar index is giving us that pullback on the dot. So we had confirms from intraday market structure, higher time frame historical key levels, economic data, lower time frame price action, lower time frame market structure, and market sentiment by looking at the US dollar, yen, and equities. That's why you can have more confidence. That's why when you follow these concepts and rinse and repeat them over and over again, it just works out beautifully, you know? And this same strategy or style, whatever you want to call it, we've been it's been the same in Capital Hungry for like that. You can ask any of the members in the private chat. We've been following the same type of approach to the markets and the way we view the markets for a year and a half now at least. And even if you just go watch the previous live streams, if you want to go take the time to watch the previous live streams, it'll teach you a lot as well. So yeah, don't forget Capital Hungry Twitter, post headlines as well when we're not streaming. Not as many as the newsroom. The newsroom to your left, which I just showcase during these free streams to be nice, is not for everyone. It's just for the private members. But you do have this. So Capital Hungry there, Telegram, free analysis chat, and the YouTube channel, of course, as well. Dollar is melting. EU is going to continue up. GJ is still bullish. EU still looks bullish now. Looks like it could break higher. UCAD, don't look for buys here just yet, just because we might get our safe sell option on UCAD as a scalp, because dollar's really waving off that strength as that economic data was positive. Because that economic data from UK, the retail sales, as well as the France and Germany PMI was good, it's bringing market optimism over the Euro session. So investors are moving their money out of the safe haven currencies, where we see yen rejected previous highs, dollar did that pullback we expected to retest structure, and equities are more bullish when you're looking at Dow Jones, UK equities, FTSE 100, and the German DAX is also doing that pullback from its low points. And Asian Pacific equities are also still very bullish. So markets now are looking more optimistic as the economic data shifted that sentiment towards the end of the week now, just for now. And we don't really have any other negative headlines. We don't have any negative we actually had some positive Brexit headlines, just talking about a hope. It isn't anything game changing. It's just talking about a hope for another deal, right? Like a hope for a deal, sorry. But as per our scalps, we banked that out, leaving the runners, got all the confirms. EU banked that out, got those confirms. UCAD gave that pullback, which we drew out. We're reacting at the higher risk buy area now. Dollar is reacting to that bullish intraday market structure. Dow Jones we stayed out of as markets were looking more optimistic because of that stronger economic data and how London opened up. Gold, we didn't take anything. We wanted the safe buys as we were starting to develop our confirms. Of respecting bullish structure, breaking out a bear structure, but we failed to break above these previous 1 minute highs in this price sensitivity area. And now we're just gonna cool it for the next 20 minutes. And watch the Euro overall PMI figures come up, because if that data is also stronger and a lot better than expected, it's obviously going to help continue the optimistic sentiment through the rest of London session overnight. And then, of course, we have the UK PMI at 4:30 a.m., which I'll just give you your guys reminders here. Don't forget, it's Friday, but always overall, stay smart, follow your trading plan, follow your risk management plan, focus on your long term vision, and avoid following impulsive emotions and short term satisfactory desires, and keep emotions out and avoid crashing your account. Some of the stream reminders there. And because we were scalping and in that scalper's mindset, and we've already mapped out, and you guys caught those two scalps for GJ and EU, now it's best just to be patient and wait for another setup. Let the emotions cool down. Don't be so impulsive, and just develop that patience too, right? Don't let your heart get all racy. Okay, let's go. Gold. Let's see if we can start to get this clean breakout above these 1 minute highs we're still reacting to. But other than that, I'm just going to go to the washroom and grab a snack. But gold looks like also, because dollar looks like it's going to break below the structure. EU, if you guys are still holding the runners, and GJ, if you're still holding, it might go to like around 137.200. And EU, we're going to say it's a 20 pip trade now, still going up. Gold about to give that 40 pip squeeze up to 1912. That is finally breaking these 1 minute highs. And I'll be back. I already did my trading. I don't trade Fridays. If you guys want to see the trades I took this week, you can just go to the Capital Hungry analysis chat. Beautiful, beautiful. All right. Oh my god, man. I'm the best. I'm really the best. Just kidding. All right, I'll be back. Don't sell, GJ. I'm back. I went to go get zooped because it's Friday and I'm giving you guys free fucking money out here. Don't sell, GJ. GJ, UK's PMI is going to be good. We have Euro PMI at 4 in the morning. Let me turn off my be right back sign. we have Euro PMI in the next 9 minutes, and I have a strong feeling that UK PMI at 4:30 is going to be good. GJ might do a pullback before that for the new hourly candle, but that pullback might just come to retest 0.800 again in this lower time frame bullish market structure that's developing and continue up because yesterday UK CPI consumer inflation was on forecast, which is telling us consumer confidence in the UK and spending is starting to pick up, as well as retail sales monthly and yearly was both really good. This can show us that at least the flash services PMI will be really good. And I think because we're seeing all of Eurozone's PMI rebound as well, we have higher probability with that previous stronger consumer sentiment data, inflation data from UK, that the PMI will also be good. And with Germany's PMI, their manufacturing PMI was well above forecast, and France's was at least on forecast. So um, I think Euro overall should be pretty solid, and UK. And this is going up to 0.200 if you guys held your runners. Anybody still holding EU buy GJ runners? And anybody in gold from 1907.5? So James, I've talked about this before. When when gold, and that's a good question. That's a really nice question. So I don't mind answering it again. So one thing that would like to talk about is like look at gold on the higher time frames and from a macro perspective. When and there was multiple reasons during the COVID crash that gold was extremely bullish. There's multiple confluences for it. But let's look at the 2008 financial collapse up until when gold peaked all-time highs previously around like 1910. When you had this massive extension due to the 2008 financial collapse, the US dollar was heavily inflated as they were trying to stimulate the economy. You had the financial markets crash, massive global uncertainty. You had gold inflate as a precious metal and safe haven to all-time highs. But what we want to identify is after it reached all-time highs, it came into this higher time frame consolidation area of around $100 per ounce, right? Like from like $200 almost, like 1600 to 1800. And then as after years later, after the economic crash, you had economies start to recover and the US start to increase their interest rates, and then recovery from that collapse, you had obviously investors close off gold positions and start shorting it, um, and getting rid of physical gold as markets were optimistic. So just keep that in mind. But now look, gold had this massive bullish extension and created and peaked at new all-time highs. This bullish extension over the last period of years is for multiple reasons: global trade wars, China and Russia and other countries stocking up and buying major amounts of gold, economic cycles of recessions, global interest rates being very low, and of course, COVID. This massive impulsive move, see how gold is creeping up quite nicely, and then you had this massive impulsive move, and then it corrected for this and consolidated for this period of time. This massive impulsive move from gold in a period of 2 months from 1750 to 2060 was because of multiple reasons. One, mass fear around global economic markets due to COVID, due to coronavirus. Second was because gold, physical gold supply and delivery was being heavily impacted. You had gold mines in production areas around the world being shut down, or their here or their production being limited. One sec. Let me find it. I have to find it. But I had a picture. Let me see if I can find it in the trade room. Here we go. So when we had the pandemic markets first hit the scene, we had all of these factors at play, impacting the financial markets. Okay, global stock markets took a massive hit. The dollar increased in value. The volatility index pushed up. Right, oil storage went through the roof as oil demand was extremely low, and you had an oversupply of it as well, as you had billions of cars off the road, and you had thousands of different industries that use oil shut down. And of course, gold mines around the world were either temporarily suspended or reduced operation. So you had fundamental low supply and high demand of physical gold, and mass market fear, and global low global interest rates. That was a fucking tongue twister for me. But you had low global interest rates, and that market fear, and that impact on the actual supply and demand. But as we had economy start to open back up, those gold production areas also opened back up, back to regular production levels, and you had the supply and delivery levels start to balance out again, and you also had markets become more optimistic. So now when gold is in this range state, we're now after peaked all-time highs, and it can potentially range. It is reacting similar to how it does in previous ranges. When gold is consolidating or exhausting after its impulsive moves, the inverse correlation between the US dollar and gold becomes more prominent. So when the US dollar is a lot stronger, gold is more bearish, and then you have obviously vice versa. But that is one of the reasons when we were in these massive fear markets, in both gold and US dollar were bullish. It was for that reason, because you had that mass economic uncertainty, you had those global gold mines shut down. US dollar was also bullish because it's a safe haven currency. But as we've started to simmer down from that point, economy started to open back up, gold peaked new all-time highs. We could see a potential similar historical repetition, where unless we have mass market fear, gold could play in a range between like 2000 1800 lows to like 2075 highs for a period of months before it makes its next impulsive move, as more order flow needs to be generated in the market, and the market moves in waves. You have impulsive moves, corrective moves, consolidation phases, and gold is pretty much at a macro perspective. After you see this massive impulsive move, similar to the 2008 financial crash, it's at a point where we're also looking at the price action. You had this massive bullish candle, bearish rejection, previous candle closed bearish. We could have a repeat and just start consolidating and play these large ranges, but understand how gold behaves in these ranges. So when gold is in these, what we want to call normal market conditions and normal economic conditions, the US dollar and gold inverse correlation is more prominent. When you have mass market fear and uncertainty, like something like COVID, both the US dollar and gold can be bullish, right? For example, when you look at the dollar, and the beautiful thing about the coronavirus markets, right, was that it taught us so much about it taught us so much about the movement of money. Okay, so this spike in the US dollar was when coronavirus first hit the markets. Okay, Euro PMI is good. Yeah, Euro PMI is good, pretty good. The service flash PMI was a bit below, but the manufacturing and the market PMI is pretty good. But anyways, when you had coronavirus fears hit the market and that mass uncertainty, US dollar inflated as a safe haven currency. The only reason it decreased in value was because those economic concepts of supply and demand impact any trading instrument, any product, any service. Supply and demand is just like a universal economic concept. Just like the same reason I was telling you gold was so bullish was because its supply was limited and demand was extremely high. The same impact is on the US dollar, except US dollar supply was extremely oversupplied. Why? Because what did the feds do and use as a tool to help recover the US economy? What did they do? They quote unquote printed out, it's just a digit on a screen now, but they printed out more US dollars. They increased the US money supply. They did quantitative easing and bought US bonds and T bills in exchange to put into the stock market and create an artificial stock market. And also the US stimulus that was given out to all US citizens who lost their jobs, that was money from the Fed. That was all new US dollars that were printed from the Fed for that financial support. This US stimulus that Trump and these other parties are discussing right now, um, these other parties are discussing right now, it is just more debt that is going to be printed out by the feds, right? So, anyways, what did you have? You had a massive oversupply of the US dollar. And as the US dollar was getting oversupplied and that money was being put into the US economy, US equities started to rally and we had a V-shaped economic rebound. And markets were what? More optimistic. That's why oh beautiful, holy shit, that's sexy. Wow. Who held their runners till the retest of structure there, man? I told you it was going up there. Anyways, the same time when you go on GJ on the daily, and after the coronavirus crash here, you have these optimistic markets in this full recovery is the same thing you will see on equities across the board, because after the crash is when the central banks, the Euro Central Bank, the Federal Reserve, the Bank of Canada, the Reserve Bank of Australia, RBNZ for New Zealand, you get the point. When all global central banks finally started to stimulate the economies and provide that support is when you had these optimistic markets, right? When you have optimistic markets, US dollar demand goes down because it's a safe haven currency. So you had this sell off move on the US dollar because of an oversupply but an under demand, meaning lower price. This example of supply and demand on an economic standpoint is also describes one of the reasons why oil went into the negatives, right? Oil, if you look at this chart here, it might be a little bit hard to see, but this is global oil storage. At the bottom here, you can see the year 2015 all the way up to 2020, and from an average storage point, you have around 60 million barrels from around 2015 to 2018. This is average oil storage globally, right? In 2020, because you had the coronavirus lead to global lockdowns and you had economy shut down, millions of cars off the road, less oil consumption, right? And you also had lower demand for it. We had a massive overstorage of 180 million barrels. That is why the crude oil price went into the negative 40s, and also because nobody wanted to pick up the contract because it was high risk. This massive sell-off move is due to a fundamental oversupply and under demand. And then as economy slowly started to open up and rebound, you had a bit of that recovery. It's really interesting, isn't it? Look how much you can learn on a macro perspective about the impacts of these pandemic markets or mass market fear or mass market optimism, and how you can digest this information and use it for potential trade ideas. Because when you understand this information on a day-to-day level and you know the market sentiment, the buyers versus seller strength, you can use this to your advantage to intraday trade, to scalp trade with momentum or volume, to play with the market structure. And it's just fucking interesting. Like, it's just interesting. These are the most corrupt, manipulated, driven by human greed and power markets in the world. It's meant to target human inefficiencies, meant to target human weaknesses. You know what I mean? It's so interesting. But yeah, anyways, that's the whole little rant about that. But yeah, let's just go back and see how these trades are doing. So anyways, somebody said something about the 1 minute being an emotional trader, but GJ played out for 30 pips on the 1 minute with the exact confirms we needed. Who held their runners on GJ? Who held the runners on GJ? Who's holding runners on EU with the 1 minute price action? We're up 30 pips on EU with that pause. Who said it was going to be good Euro data? Who said it was going to be good Euro data? Who's holding runners on EU? Who's holding runners on GJ? We got positive Euro data. We got positive German data. We got positive France data, positive UK retail sales data. We got US dollar fairly bearish, breaking bullish intraday structure. We got global equities bullish as fuck. Market optimism is a lot stronger. GJ is just doing a bit of a pullback right now because I think because of the UK PMI data coming out in 30 minutes. So just be cautious of that. And how we also rejected at that bearish market structure. Gold, if you're in the buys, you're still a bit safe, but I would just keep yourself at break even. We're looking to go back up to 1912, but I would just watch it and keep yourself at break even if you entered at 1907.5. Best forecast you have seen since 2014? What do you mean, Alan? Big class, you cop some pie, holding GJ runner, Kylan. Kylan, you close any runner. Okay, so you did close some positions. Solar, gold. Just keep yourself risk free on gold. Yes, Zalek. I like that is a common thing, Zalek. But if you have that strong volatility, that one directional volatility, then we could just have that continuation up at least till Asian session close, which is in 1 hour. So we have the 4 hour candle closing in 1 hour. I think the GJ, I have a higher potential that GJ is gonna also, sorry, UK is also gonna have strong PMI data to follow suit with Euro, and not just to follow suit with Euro because obviously it's a different country, mainly because of the strong retail sales and the strong CPI figures, which shows us better consumer sentiment and behavior developing and economic rebound slowly in the UK. But let's just see how the PMI figures are. Yeah, there's an economic data webinar in the private chat, AJ. I wouldn't. You could enter GJ buys now because it did retest. So remember we were talking about the psychological price levels. See how we actually retested like 0.800 on the dot once we had that break above, and now we had this clean break. We're retesting around 137. You could get this squeeze up to 137.2, but we might just mess around a bit. Tell the PMI data in like 10 minutes. I would not advise it. If you want to, it's higher risk, higher risk, less reward at this point. But if you're in since 136.8 and you're holding a runner, hold that runner. But that was a beautiful 35 pip call. EU still going up for 30 pips. We got all our confirms there for the buys. You can always rewatch this. Our main bias was sells, but that's from an intraday perspective, as we wanted the retest of at least the key level and bearish market structure for optimal sells anyways. And UCAD, we might get our safe sell option as we start to break these lows, and we didn't get our safe buy option. As of course, markets are looking more optimistic on that positive data. US dollar is breaking intraday bullish structure. Equities are looking more solid across the board. If you guys enjoyed the stream, enjoy the content, enjoy the trade ideas shared, if you enjoy the trade ideas shared, the content, the analysis, the banter, share it around, like the stream, subscribe to the channel, use all of the free resources provided, the Capital Hungry YouTube, of course, analysis webinars. analysis webinars, previous trading streams. Let's get these views and likes up, you know what I mean? The free Telegram analysis channel if you want to join it. The Capital Hungry Twitter where we post headlines. Not as many headlines as the news terminal. That's for only private members. But it still posts a good amount of headlines throughout the day. The private members get access to all like the detailed information. We do these live sessions more often. The Zoom sessions, session alerts, key level price alerts, intraday analysis, weekly updates, weekly update analysis, news briefings, economic data reports, weekly recap webinars, refresher webinars, all the 50 educational webinars, the 300 breakdown webinars. But all this free stuff is still extremely useful. Telegram, YouTube. These 200 webinars, though, that's for the private channel. All right. Yeah, that's why I said just get out, keep gold risk free, so you don't lose anything, especially on a Friday. If you are in an entry, it should continue up with the US dollar weakness, but gold does do deep pullbacks. Because the US dollar is fairly bearish, heading right back down to 92.7. US volatility chart, the VIX, the volatility index. Let's just search up the VIX, VIX. Dow's breaking above bear structure. Dow actually gave nice scalp buys here, but obviously we didn't call that. UK equities, DAX, Dow Jones, like US futures are all looking solid. Economic data was looking a lot stronger. We have UK PMI in 17 minutes. Euro straight to the key level. W's in the chat for the Euro trade. W's in the chat for the GJ trade. Runners are healthy. Runners are healthy. If you want to see this done, if you think this was all a hoax, how did I know the news would be positive before they hit? By using economic forecasting and understanding the correlation between different economic data. A lot of this economic data is connected. Like you could tell that retail sales was going to be good by understanding consumer consumer price index, which is consumer inflation data, was good the previous day, right? And other like historical analysis, forecasting. GJ looks like it's going to head up to 0.200 for the 40 pips as well. If you think this is a hoax and you're mad because like we make it look easy, no, I'm just joking around. If you think this is like a one-time crap shot, then you can always go watch the 5 other live streams we've done, because we use the same concepts. And in Capital Hungry Private, we just do it more often. And obviously, I'm gonna not do these streams every single day. I was just teasing the public a bit. You know, this isn't no Asian stream. We don't come in like guessing what's gonna happen. We don't say this can happen, that can happen. We come in with a plan. We come in with experience, with confidence. We take dubs. GG on the 4-hour lower wick? Yes, it can. But we still have an hour until then. Yeah, good reminder. Yeah, UK PMI just in coming up on the docket here. 14 minutes till UK PMI, which I'm thinking is going to be good. No, euro and pound don't correlate. All risk currencies correlate. Your risk currencies are like euro, GBP, NZD, AUD, CAD. Obviously, they have individual impacting factors depending on what's going on in that country, political ties, economic data. But when you have mass market optimism, and you see money going into these risk currencies, you see money going into the equities, the correlated equities of those countries, you see money going out of the safe haven currencies, money going out of gold, right? When you have mass market fear and uncertainty, investors move their money. It's just money moving around hand to hand, keeping it safe. That aggressive sound, yes, that was EU hitting our key level target. This was a good secondary entry, but don't leave the hungry refugees hungry. Have I left you hungry refugees hungry? Who's been here? Oh man, EU. Who's still holding EU runners? Dollar. Dollar's giving us a safe sell option. Gold. Who's holding gold? That was beauty. So we got gold here. So gold. Oh, 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 oh no! I nutted too. Oh, damn gold. All right, stream. So what can we say? What can we say was called ahead of time? Right on the dot. Right on the dot. That retest. Right on the dot. I said that's a good retest. So what can we say? We could say GJ what? 35 pips? Is that cool with you, chat? Is that cool to confirm? Because you know what I mean. I don't want to bullshit you guys. We're not doing no fake shit here. We don't lie and say we're doing a 90% win rate. Oh, we caught 500 pips. We made $100 million. We're just saying the truth. So what are we saying here? GJ, we caught 35 pips. That's fair. Fully planned out what to look for. Runners should be running for 35 pips, right? Full breakdown why. Full breakdown why. What to look for. You can always rewatch this. Key psychological price levels. Okay, cool. Euro USD, I could say 40 pips on the runners. Euro USD, fair. 40 pips. 40 pips on the runners. Euro USD, fair. Failed to break 1 minute lows. Broke above minor bearish market structure. Broke above 1 minute highs. Dollar index was also giving that pullback and going bearish. Euro economic data we called was solid like we expected. Oh, wait, 42 pips. I only trade 3 days a week. Just to have more discipline and control in my trading. I trade Tuesday, Wednesday, Thursday. Gold will call 30 pips. No, Jeff. Jeff, you're such a noob, man. You've been watching me since I started trading. You follow me on Instagram. You see when I made money. You watch all these streams. You're such a noob, bro. If for a guy on a fake account, like with all like who's been watching me for this many years, watching all my posts, like you should have learned by now. It's just sad. The more time you spend in the markets, the higher probability you also have of potentially losing. Yeah, this guy's been watching me since I traded penny lots up to higher lots when I had my IG account, when I used to just do webinars and stuff like that. He watched every single one of these live streams. It's like, come on, man. Be smarter. Don't disrespect yourself like that. Have some self-pride. you're not dumb, you know? You've been watching me this if you've been watching me this long, you're not dumb. You should know how the markets work. You have to be selective. You have to be mature about it. You can't just be chasing every dollar saying it's going to be leaving money. That's such an immature mindset to like always think about when you're trading, right? You should be thinking about what you can lose, not what more you can win. Jesse, another stupid question. Are you a 1 minute trader? No, I'm a trader. 1 minute, the observation of 1 minute price action is a part of my trading style. Are you a 1 minute trader? You guys, YouTube audience is always like, I IQ drops, you know. Nehem, Nehem, you just got three signals right here. Nehemiah, Nehemiah Gaddis. You just got three signals. You just got three full breakdowns on. We just confirmed GJ 35 pips, EU 40 pips, XAU USD 30 pips. Thank you, Mo. See, I like see. I'm just kidding around with you guys. It's Friday. It's the end of the week. We already talked about the fundamentals. We already talked about the technicals. Okay, let's see here. I got notes because like I'm serious about this. Want to help out. We already talked about the fundamental. Wait, what the fuck? How many IQ points have I lost from the chat? So we already reviewed market sentiment. We reviewed fundamental points, economic data, market structure, lower time frame structure, and then we created trade ideas. We focused on the PMI, and we also focused on any of the headlines that could possibly impact it. And then once those trade ideas started to play out, we talked about exactly when to execute on it, when to close some main scalps, what to continue leaving runners, and what to observe to continue to extend the trades. All right. We use market sentiment, higher time frame, historical key levels. If you guys watch any of the analysis videos, just veer. Oh, what? That's an OG. I haven't heard from this man in a long time. But yeah, Euro USD straight to the, where's the reaction? Straight to the bearish market structure on a dime. GJ still reacting here, but we have the UK PMI data in 7 minutes. Yeah, the YouTube chat did bring down my IQ points a bit. Yeah, trust me. That's why I don't want noobs. That's why I don't let you know how like other marketers or people with services, anybody can sign up. No, not just anybody can sign up for Capital Hungry. I don't like. There's no way I'm gonna deal with retardation. Unless you're actually mentally handicapped and you're trying to trade, then I apologize if I you know what I mean, hurt your feelings. But other than that, Racer, you could just rewatch this webinar, or you could just rewind it, and you'll see where these like market structure points were connected for, like where they were connected and why. Yeah, everybody start. Yeah, I'm not disrespecting you guys at all, Jordan. Everybody starts somewhere. Okay, we have the flash. We have the UK PMI figures coming out, 4 minutes 50 seconds. But okay, let me be completely honest with you guys. I don't judge anybody for having a lack of knowledge, or if they're actually striving to learn something but they may struggle learning it. I don't judge anybody for that. But I do judge people who are ignorant and lack using effort, and just lack putting in effort into anything, right? I hate people that do not put effort into life. I just hate that. I hate lazy people, and I hate ignorant people. I hate people who refuse to learn because it might be difficult for them, or refuse to do something because it might require a lot of work, time, and effort. I just can't stand all of that. And usually that's broke people. So you know what I mean? It's correlated. It is correlated. But if you're new and you're studying, like if you're just new to the market and you're a noob and you're studying, but you're putting the time and effort in, Bill Gates likes lazy people because he makes money off lazy people. And they tell him about convenience and like we discussed a lot. No, nobody's talking shit. This is just our ban. Remember, we're traders. We're trading finance. We're trading absolutely greedy and corrupt financial markets where people would cut each other's arm and leg off. We can fuck around and banter a bit and have a bit thicker skin in the chat and around each other as long as we still provide value. Like we already did the job. We already did the analysis, called the trades, executed on it, took profit, left runners, broke it down why, right? So once you're done your job, it's okay to shoot the shit and have a bit thicker skin, especially when you're trading financial markets. You can't really be a softie, right? You can't really be that emotionally impacted. I don't mind bantering with people, talking shit, debating. I could debate for hours. I do not mind that. So we have the UK PMI data, but let's just see how it goes. And then Asian session close in 30 minutes in the new 4 hour candle. So we'll just look at how the intraday is looking. How have I changed? I've become a lot more ruthless. My value of money actively I see no limits to what I can earn from the market and just in life overall. I know it'll take time, I know it'll take effort, but like I'm never scared about ever being able to make money or ever needing to work a job again, like at the bare minimum. And like you just became a lot more ruthless as a person, a lot more direct and aggressive, but also patient in some aspects. Not in a bad way, but just like, you know what I mean? Like it's hard to explain. Yeah, everybody should journal. I have a physical journal too. I like to write notes and take physical notes personally. Yeah, so you just have the UK PMI in 30 seconds here. Don't forget if you're in trades. Rory, how long have you been trading for? And what was like winning to you? UK PMI is mixed. It's average. Flash composite is down by 1 point, but it's still above 50. Flash manufacturing is above. Flash services is down. So this might give us the GJ pullback to like retest the structure, and then we'll see what happens from there. So you think Kobe didn't want to give up? Bro, you just been trading 6 months and you want to quit? You're soft. You know how I was just talking about like thick skin and like putting time and effort in, and like yeah, If you're already feeling like you want to quit, and it's only been 6 months, 6 months, then yeah, you should quit because you're soft. Let's say for you then, if you only want to quit from then, six months and you're complaining about losing trades and shit. I thought you were gonna say 6 years. Let's see if UCAD might give some nice sells here. Dollar for this new 30-minute candle did respect the key level 92.75, but hopefully it just creates a top wick and then flips bearish. Yeah, if you're in 6 months and you want to quit, that's not a good mindset. That's like, let's just say you okay. Let's just say this, Rory. If you wanted to be a professional basketball player, could you do it in 6 months? Because the end goal of being a great trader is most likely for everyone to financial freedom, and most likely at the minimum, financial freedom is hundreds of thousands, if not millions of dollars, right? Just like the payout you would get if you were like a professional athlete, if you wanted to be a doctor, if you wanted to own a business, if you wanted to be a professional chef, whatever it is. So Rory, if you wanted to be a professional athlete, could you do that in 6 months? Or if you were trying to be an NBA player or trying to be a professional hockey player or a professional anything, can you do that in 6 months? So why are you looking at trading in the perspective of 6 months and you're trying to quit? That's soft. But it's okay, you're new. So don't take that to heart, you know? You already know where gold's about to go. Don't enter now, but if you're already in, man, I'm just trying to get some hoes. Most people quit anything they want to do within the first 3 days. People nowadays in our modern society, especially the newer generation, they're gonna be fucked. They're lazy. They want everything as fast as convenient as possible. They don't want to put work into anything. They don't want to sacrifice anything. And success or any type of greatness takes sacrifice. It takes effort. It takes time, repetition. But what repetition do we all do? All of us, not me. Me not as much as you because I'm a bit more advanced. I'm a bit higher of a human. No, I'm just joking. We're all the same. But what repetition are you guys all programmed to do? You're all programmed to do repetition that you don't even notice anymore, just naturally from the system, such as listening, such as going into the school system, what you eat, what you watch, what you consume. Don't aren't you? How many of you are scrolling on your phones through different social media apps, repetitively every single day? It's a habit that you didn't even want to form. How many of you do that? All of you do. I don't got IG, so you know what I mean. I don't. I just stick to the charts. That's why I'm sharp. That's why I can. That's why I can be the one giving out the trade ideas. But in the chat, how many of you have continuous repetition that Scarlett, I like you? How many of you have those continuous repetitive patterns that are programmed by these big corporations, by these tech giants, big pharma, food? People have people have repetition with either getting a coffee or an energy drink or some type of stimulant every day, repetition with when they drink alcohol or smoke cigarettes, repetition with social media and the media they consume. But all of that repetition that nobody minds is negative, and it actually leads to a negative impact on you mentally, financially, and physically. The repetition we are constantly being fed from the food to eat, from the social media, from the tech, from the system that's just milking us as we continue to work and slave away, is also deteriorating our health, our physical health, mental health, and our finances, right? But that same concept of repetition that is causing us to get milked can also be flipped and being used to a positive if you create repetition around things that will lead to success, such as putting effort into learning a skill set, right? Putting effort into developing your weaknesses and turning them into strengths, putting effort into facing your fears, putting effort into going against the 99% in the regular mold. But I can preach that all day. It's up to people to change, and people don't want to change. I don't have Instagram. I just told man about social media, and he said, "Hey, what's your IG?" I just said, "See what I mean? See what I mean with the YouTube chat?" I just talked about how social media is toxic, and man says, "Hey, G, what's your IG?" No, I like you guys. I like you guys a lot. I appreciate the support. I appreciate the viewership. Y'all are cool in the chat. What is my fear? Oh, where's gold going? W's in the chat for gold. Who held gold? W's in the chat for gold. Who held the squeeze? 40 pips. Who held the squeeze? 40 pips. Is anybody still holding GJ, EU, or gold? Yeah, Zul. Yeah, yeah. Pretty much reacting at the key level on a dot. You pipped and dipped. No, I love you guys. Hate us. I didn't say it's not good to trade on a Friday. You guys have to understand this is another psychological aspect of trading is the more active time you spend trading in the markets, not studying, not back testing, just actively looking for trades, trying to make money, the higher probability you have of losing. And too many traders who are inexperienced constantly stress and worry and cry over the factors of the market that they cannot control, right? So one thing you should do to get more emotional control is take as much control in your trading as possible. Understand when you trade, have rules and discipline of when you trade, why you trade, the rules of how you trade, right? Like for example, this systematic approach of what we are looking for our confirms to take GJ buys is to put confidence in our favor and to develop a checklist where we can say, okay, there's higher probability of we can ride with buyers in the market because of these 4 or 5 different reasons, fundamentally and technically. Right. Yeah, so all of the data has come out from Euro session. UK retail sales was good. France PMI, Germany PMI, Euro PMI overall was solid. UK PMI was fixed. Now we just have the US PMI during New York session at 9:45 in the morning. There's not too many. There's not too many high impact headlines, and we still see that the markets are fairly optimistic. It does look like the dollar can continue to flip bearish. Equities are still looking quite bullish with UK equity solid, German Euro equity solid, US futures, aka Dow Jones, is still quite bullish. UCAD did give that clean retest, but it's only up 6 pips right now of the safe sell option of dollar turning bearish, break below bullish structure, break below 1.313 and retest it. But just be cautious as we have Asian session close coming in 20 minutes. And usually at Asian market close and at that 4 hour technical candle close and during pre New York, there can be bigger pullbacks to set up price for North American investors and into New York Open. So if usually I like to close out my main portion percentages of my trades and just leave runners break even. And then of course you have your headlines to the left here. Nothing too high impact, of course. Just yeah, nothing too crazy, but you can observe it to your left. Stream reminders if you guys need this information. Who's been on all the streams since I done? I think this is the sixth stream. Who's been on all of them? I, I don't want to say anything about win rates, or I don't want to say like this stream is better than other streams, but or boast. But I think we've only taken wins so far. I don't want to jinx it. I think we've only made money, and like with and not like some bullshit, like with full breakdowns of why, what we're looking for, the price action, the buyers and sellers strength, the market structure, the historical levels, the fundamental sentiment, the investor behavior, looking at our different tools to use as well, right? I'm not the biggest fan of books. I'm more a hands-on learner. Like I went through a lot of trial and error through trading and lost a lot of money when I first started as well. But great, great. Yeah, if you guys like the stream, if you guys like the information provided, then just send a like, subscribe, share it around. We're just starting to slow down with the volumes now as we're coming towards Asian session close. And also, it is the end of the week. It is Friday. I'll just be right back. And don't forget, you can always rewind the stream to see the trade ideas that were called ahead of time and what we would look for and what we would need and why to start watching the reactions and stuff too. And you can also like watch it after and take notes and then back test the theories that are shown as well, you know? W's in the chat for gold. W's in the chat for the gold buys. 45 pips. W's in the chat for the gold buys. W's in the chat for the GJ buys. W's in the chat for the EU buys. Chris Baba, I'm never answering your questions again. And I'll be right back. All right, I'm back. Let's do some Q&A. So we've already taken 3 great trades. It's Friday. Don't get greedy. Go into the weekend happy. GJ is also doing that pullback we expected once it retested this bearish market structure. But everybody should have banked out once we have these rejections at the bearish market structure anyways. And we do have Asian session close coming up in about 9 minutes, new 4-hour candles. This 4-hour is still closing fairly weak, and we did retest this previous area of price sensitivity, and of course near 137.200. But as long as we maintain above 137.8 and sellers fail to break lower, we can see more buyers enter the market and come revisit these highs as markets are looking a bit more optimistic, and that optimism might bleed into New York session. But of course, we have new 4 hours candles coming up, so not looking for buys, not looking for anything on GJ right now. This wasn't even like, this is just a minor structure here. It wasn't a clean bullish structure. If it is going to come down, it's going to come back down to 0.800. Euro USD done. Buys are done. Gold buys are done. UCAD, we're not taking anything. We're out of that. 3 trades for Fridays, clean enough. Dollar's messing around now. Let's just do a Q&A for about 20 minutes, 30 minutes, and then we'll call it a day for Friday. You know what I'm saying? Let me put my be right back sign off. Let me see the messages. Thank you for the W's. Thank you for the W's. W City. I appreciate the support. Appreciate the love. Just trying to help you all out. Jesse. Oh, you said something, Jesse. Sorry. Is this a trading view link? How do I oh, okay. I got you. Oh, it didn't work. How? Oh, chart / chart. My bad. I got you. No, what the hell? Let me, Jesse. I don't know. The link's not working for me, Jesse. If you want to send it again, I'll try it again in a second. It looks like it's working. Put the playback speed to 1.5. Gee, you take trades against the trend. Well, it depends. It depends on what you are looking at, because the market moves in waves, right? For example, the GJ buys, we were expecting that pullback for potential sells at a retest of bear structure anyways. We didn't take the sells as we executed in the buys, and we didn't want to jump in trades one after another. And also um, another thing is we are in the mindset and in the style of a scalper. As a scalper, you're only looking to trade smaller pip ranges of 10, 20, 30 pips and be in the market for a shorter period of time, right? So if you have your confirms lined up like we did, and we identified our ranges, our exit points, our entry areas, and what risk versus reward we are looking for, then it's not like we're going against the trend. We're just taking advantage of that corrective phase or pullback that GJ was doing to retest this bearish market structure, because our main bias was still sells because of the Brexit uncertainty, mixed UK data, yen strength, right? But this pullback made more sense for sellers to enter the market from a better price. But as scalpers, we took advantage of that pullback because that pullback falls into our pip range and the confirms we needed to take advantage of it. And you can obviously rewatch this webinar to see that as well. Eggnogs, you got profit on gold. Beautiful. 50 pips. Beautiful, beautiful. Any resources to learn more about the fundamental aspect of trading? Yes, sir. You have the Capital Hungry YouTube. You can watch all these videos. If you watch all these videos and take notes, you will 100% know more about the market, and your IQ will increase compared to right now, compared to your current IQ. If you go through this Capital Hungry and free analysis free chat, the Capital Hungry Twitter, which posts headlines, analysis stuff too, reminders, great live stream. We caught the 40 pip EU, 40 pip GJ, 40 pip gold, all called live. And if you want more, then you have to join the Capital Hungry private channel where we do weekly recap webinars, we review the economic data reports, we do more of these sessions because I'm not going to be doing these sessions all the time, obviously, um, because we're going to be doing it more often in the private chat. But you get access to the Capital Hungry newsroom, the Capital Hungry trade room, access to over these 200 plus webinars and the 50 plus educational webinars, the key level price alerts, for example, like when gold hit 1912 there, or USD hit 1.184. Instead of just actively watching the charts, you get a price alert sent right to the Telegram chat. Yeah, we do a lot. We do a lot. It's too much to talk about. But there's a ton of free stuff from your boy. So, does your strategy work without the fund? Well, not really. When does the live stream start? Anywhere from 1:30 a.m. to 2 a.m. Eastern, usually pre-London hours. You should start a signal channel. No, I don't want to do a signal channel. Signal channels are cheesy. Regular streams, probably at least once or twice a week. It's more regular with like the private channel, but still, yeah. Here, the private channel members in the Zoom chat will tell you. You got Raymond telling you right now. Tell them YouTubers to join the private group. The educational webinars are priceless. But yeah, we do this shit on the regular. Obviously, you guys are going more hype because you're just getting used to this information now. But a lot of these guys are used to it. Oh, US Nasdaq. Oh, this is nice. Yeah, this is nice. But just watch out because it's gonna depend on the US PMI figures at 9:45 a.m. as well as the US stimulus. If there are positive talks around the US stimulus, where for now there wasn't, and the US PMI figures are also good, which I think they will be, and we do have markets more optimistic overnight. This does make sense, especially with this nice order block and support being created. Ideally, for a safer entry, I would wait for the breakout of the bullish market structure in a retest and then put my stop below the structure candle body lows, so you don't have to sacrifice as much of a bigger stop. But the stop does make sense as you're going for an intraday trade, and with your risk versus reward, this is still like a 1 to 3, looks like a 1 to 4 risk versus reward trade that you're trying to target back to the intraday highs. I like this bullish market structure that I was developing, how we had a break of this bearish structure, and this liquidity was more buyer side liquidity. And I like the potential to revisit these intraday highs created by buyers. But just as it's coming towards the end of the week, just keep an eye on like any news sites you use. You can of course follow the Capital Hungry Twitter, which does post headlines all the time. Not as much as the news terminal, but it does post a lot of headlines, right? But this does look like a very favorable trade. I would just wait for the breakout retest entry out of the bearish market structure you have identified and above these 1 hour candle body highs where you've seen a lot of rejection here, like right around this area where you have the zero point 0.5 area mark. But yeah, very important zone of reaction. And if you enter at that breakout and retest, you can put your stop below the actual candle body closure, just a bit below it instead of below the wick, and you still be safe. Yeah, that's a nice that's nice Very nice technical analysis though. I like that. Very nice. Yeah, GJ is coming down to 136.8 as we expected. Very solid rejections at 137.1. It is following our main sell bias, but this new 4 hour candle, what we just want to identify, does not have a top wick at all. Now, this isn't like some type of like technical cue, but just through my few years of trading in different and backtesting different technical theories, I have noticed higher time frame candles and higher time frame intraday candles do create wicks more often than not, both on the bottom and top. Like there's like 8 out of 10 candles will have both a bottom and top wick. So just as we do have lower time frame, as we still do have the lower time frame breakout of structure, if we retest 136.8 and fail to break back below structure, the 4 hour candle does have potential to go back up to create that top wick and potentially revisit these highs, as there might have just been more buyer order flow needed in the market to break above the bearish structure at 137.2, which was not enough at the time, as UK PMI data was also mixed, and we did have this 40 pip up move from like the 136.7 low here. So if this just comes back to 0.800 and creates a support and then starts creating that more solid lower time frame bullish market structure, that's showing us that more buyers are entering the market to revisit these highs and potentially break higher if market optimism continues stronger through New York, and to create that 4 hour top wick, right? Technically. But let's just see how it goes. Yeah, Euro USD, probably going to do a pullback to retest this price sensitivity area, and similar idea. The 4 hours still did reject this minor bearish market structure and below our key level, but this is a very, very solid 4 hour close. So if the US dollar weakness continues through New York, EU is just doing a pullback to get more buyer order flow into the market and create a higher low, and then again continue up to revisit the highs or potentially break higher. Because if that US PMI data is good during New York, it's going to bring optimism and actually weaken the US dollar and increase the value of US equities like the Nasdaq, Dow Jones. And then if there's also positive stimulus talks, that's another plus. But also you have to worry about the inverse, because if that US PMI data is poor, and if there's negative stimulus talks and they continue to delay it and just play games around it, then Dow Jones and US equities will take a dip and US dollar will pick up strength just to close off the week there. All right. But I think the markets are going to be optimistic just to close off the week now. I'm just waiting for GJ to actually come down right to 0.800 and see how it reacts. If it does react there, stimulus talks is a reactive event. It's between like people in Trump's party. I forget how to say his name, Mnuchin, and of course like Nancy Pelosi, and it's been going on for a couple of weeks now, back and forth with no real progression. So you just have to wait for your news sources where you can follow the Capital Hungry Twitter when they do finally start talking. I don't use any technical indicators. Like if you like whatever you guys see in front of you is what I use for analysis, and whatever I talk about and say and use is exactly what I use. Like I don't use any EMAs, I don't use any fib personally or any of those technical indicators. But if you use them and you know how to use them, and it's a positive tool and gives you confidence in your trades, then continue to do it. Instagram, no, I don't want to make an Instagram. It's okay. I've been trading a lot better and been a lot more calm, sharper, alert, working harder without social media, to be honest. Less distractions. You're welcome, A Rod. You're welcome. So yeah, it is Asian session close. It is new 4 hour candles. I've blown a lot of accounts before I came consistent because I never traded demo because I always had a good career and always worked a job since I was like 14. I always traded live, and when I first started and didn't know shit, I was jumping from strategy to strategy, trying signal chats, trying account managers, trying different mentors, always like not putting any not focusing on anything that would lead to long-term growth. But that was just because I was misinformed and had bad exposure like a lot of people do when they come into trading, especially in the retail trading communities, right? It's all just different marketers and courses. So through that, and because I'm more of a hands-on learner, I learned through that trial and error and had at least $20,000 minimum losses like my first year of trading. But once I actually put time and effort into learning the craft, that's when my trading progressed from like penny lots and earning like $100 a day to like $1,000 a week to $1,000 a day to like having $10,000 days and like $30,000 months. And then I've been focusing more on trying to compound my wealth into more like financial freedom money long term, which can take years. But my broker, Vantage FX, is stopping to support Canadian clients November 31st. So I've just been more just scalping, making day to day money as I do just trade full time and run Capital Hungry Private and a couple other things on the side. And just doing stuff like this, but I do it on a day to day basis, right? And it's a lot more money than I used to make at my full time career, which actually paid pretty well. And I only trade Tuesday, Wednesdays, and Thursdays, but still, 4,500 in a week. It's not financial freedom millionaire money, but it's still well above average and like good for me. But of course I want to compound and do greater things, but it takes time and a lot of effort. They should get a job first. They should know the value of a dollar. Please check gold. What is it? Gold's just doing a pullback now. Look at the reactions at the key levels, eh? Beautiful to watch on the 1 minute. Watching buyers and sellers react at these historical higher time frame key levels or right on market structure points, like creating that support. Like look at that bounce right off that retest of market structure and then retested those 1 minute highs. Beautiful, beautiful, beautiful. But yeah, gold, similar idea. Safer buys for gold at this point would be if dollar continues bearish through New York and we break above 1912 as we have broken above the intraday bear structure. But otherwise, if you remember our original plan, we were expecting this corrective action overnight as just for that bit of market optimism and then potential sells to break these previous price sensitivity lows. So to summarize, chat, we can confirm 40 pip GJ buys, 40 pip Euro USD buys, and a 40 pip XAU USD buys. So beautiful, beautiful night. Great way to close off the week. What's the stop loss on the GJ buy? Oh, you just entered, Josh? Well, we're waiting for it to come down and retest 0.800, which is sort of is doing around 0.85 now if it creates a flat candle body support. But we're waiting till pre New York. Stream's done. Stream's almost done now, buddy. Nah, this guy. I know he just woke up. How many trades per day on average? No, more just depends on the pre-setup. Like very similar to what we did at the start of the stream here. And I really advise anyone who is watching right now to re-watch these streams or to rewind them and watch them from the start because the trades we executed, the gold buys, the GJ buys, the EU buys, they were planned and we developed a list of confirms we would need both technically based on market structure, price action, as well as fundamentally based on like market sentiment, economic data, and we are observing headlines for any fear or optimism. We created those trade ideas ahead of time, right? That is the planning behind it. So you only develop these 2 or 3 setups that you have your confirms for, that puts confidence and probability in your favors to execute a risk on for a potential reward where your reward should be a minimum 2 to 3 times larger than what you're risking or putting into the market, right? So if you watch the start of this stream when we're first doing the analysis from the intraday perspective and then zooming down the time frames, we developed what confirms we would need to take these GJ buys. For example, we knew that we had overall bearish market structure. This line, because I know we're watching the 1 minute, but always zoom out and understand the intradays, the higher time frames. This line is just identifying the intraday for a 1 hour bearish market structure. We had a very strong impulsive sell off and lows created by sellers, right? We were going to continue to play these sells if bearish market structure was respected. But if we had a shift in the lower time frame structure and buyers and sellers strength, we expected a pullback for the intraday to test that structure at least. Now that pullback is 35 to 40 pips. That's a beautiful scalp trade to take and fits in a scalper's time period as well, because it played out like within the hour, right? So what did we have? We had stronger UK economic data, which from the retail sales and from the PMI wasn't bad. We also had sellers fail to break the lows that they created and start to show signs of sellers exhaustion, and that sellers are closing off some of their order flow, right? Sellers can only exit and close off their order flow if buyers also correspondingly enter the market to relieve that order flow, because buyers and sellers work hand in hand. We have our psychological price levels laid out based on the quarter point theory and based on back tested technical levels between larger 100 pip ranges 0, 0, 0.200, 0.500, 0.800. We identified this minor bearish market structure that we were seeing respected as lows were created, right? So after noticing the seller's exhaustion, buyers jump into the market, break above 136.800 psychological price level, and break above bearish market structure. This is now showing us a shift in momentum, right? This is showing us more seller strength. And then you get a retest of these previous 1 minute highs that failed to break, which is also at 0.800 psychological price level, a flat candle body support made on the 1 minute, which is telling you more buyers are entering the market, and we entered with them and took that squeeze for that target range for at least that pullback to retest the intraday structure. We already had our confirms listed out, looking at the dollar, looking at the Japanese yen to tell us about investor behavior being more optimistic as money is coming out of safe haven currencies. Yen is rejecting previous highs. We're looking at UK equities live are bullish overnight, showing more investor optimism in UK stock markets, right? We're looking at UK retail sales data coming out positive and and we even watched it come out negative and then get revised to be positive, adapting to that quickly. And we're using that information to create these trade ideas and play with the buyers and sellers at that time. And we played with these buyers and we moved with the market. We weren't fighting it. You feel me? Same thing on EU. Main bias is sells to retest this intraday structure, but we took advantage of the same type of idea. Very strong seller strength, right? You have peak sells, impulsive sells, lows created. So we can identify this bearish market structure. We can identify this area of price sensitivity where you see a lower time frame order block and where we saw this seller's impulsive move. We can identify the low. These are things we can identify. So what can we start to map out that we would need for buys fundamentally and technically that we did, and now we're just recapping it. One is, first, we know that sellers are in control. So we would need a breakout of structure and signs of sellers exhaustion. And another thing we can identify is that once this low was created by sellers, we did have a bit of a buyer's bounce, but buyers rejecting at these 1 minute highs in an area of price sensitivity. And then we had this bit of a pullback and a quick little squeeze and sell off from that exact same price point, right? Sellers re-entered the market and it looked like as we were respecting bearish market structure, but created a lower time frame support. And where is this support? Pretty much at the same price point of that initial low that was created. This failure to break that low is the first sign of sellers exhaustion. Then, as we break above the bearish market structure, this is the second sign of seller's exhaustion and a shift in momentum into buyer strength as we break above these 1 minute highs as well, right? Then we also had stronger Euro PMI data and a support created at above the previous highs right on the dot. You can see the price sensitivity. And we were already entering after this retest of structure in this bullish candle close. Okay. At the same time, fundamentally, we're noticing optimistic markets, but more specifically, because the secondary in this pair is the US dollar, we're noticing the dollar standalone is bearish. We're also noticing German equities, even though it's not as big of a bounce as UK equities, it is at least bullish. So we rode with buyers for that upside, 40 pips. Gold, look, what's different? Main bias is sells if the US strength continues, and we were looking for a retest to 1912, but to see this corrective action, we said we can take this squeeze, right? What do you see happen here? What's different? Because of the US dollar strength and the market fear that took place during New York session and previous sessions, we had sellers in control. Sellers impulsive candles, corrective buy sides, and sellers impulsive moves. This was looking like more corrective upside. Even this peak up to 1912. But what we identified was that there is signs of sellers exhaustion as lower time frame bullish market structure was developing and we were holding above 1902, right? So as the US dollar softened, it was the same principle. You have, yes, sellers are in control, you have this bearish market structure. Yes, you're starting to notice some sellers exhaustion. One, you have identified that when you had this seller's exhaustion and buyers jumped into the market, you would still react at, this was the first reaction price point. And even when we went to revisit these lows, we still failed to break above bearish market structure or that exact same price point. This is a significant price point now. You can also see the sensitivity to the left there, just in recent price action. So what would we need for buys? We would need a break above that price point, a break above bearish market structure, and we would need the US dollar weak because you have the gold and US dollar inverse correlation more prominent. That's why when we got this clean break, you can see the retest happened on the dot, or even if you entered at the breakout, and then we took that squeeze up to this historical price point, 1912. 42 pips, and then you see the reaction there. Beautiful, right? I know something clicks in your head when you speak about the market that way, right? When you talk about the buyers and sellers strength, the order flow working hand in hand. For these sellers, for these sellers to exit the market from this point and close off their order flow, you need buyers to enter the market to have that corrective phase. Otherwise, they cannot exit their positions. They cannot liquidate their positions. And this concept can be used for the same thing for a bullish trend. And then finally getting a break of that trend. And like, you know what I mean? The same type of idea on buyers and sellers strength. And when you use these historical price points alongside market structure and understanding buyers and sellers strength alongside economic data and market sentiment, oh man, holy shit, you just have so many weapons to use that are all working hand in hand. You feel me? Hopefully that made sense. You can if you rewatch the webinars on my YouTube, it'll make a lot more sense. But GJ had a really nice retest near 136.8. It was just 5 pips below it, But you can see, obviously, it's not going to be all the time, always on the dot. We are developing some more defined bullish market structure now with potential to revisit these highs, reacting at 137. You can see the flat candle body support on the 1 minute there. Very similar to like what it did here at the breakout and retest of 0.800. EU's continuing up. If anybody held runners, beautiful trade on EU. Understanding the order flow, looking at buyers and sellers strength, market sentiment, economic data. Understanding German and France and Euro PMI was solid. Playing that to our favor to extend the positions. Where do you think gold is gold? Fucking YouTube chat got the lowest IQ. I don't, you know what? I don't know why I just gave that full breakdown of order flow and observing buyers and seller strength, because that just went over everybody's head in the I forgot who I was talking to. I forgot while I was just ranting about market sentiment, investor behavior, fundamentals, and economic data, buyers and seller strength. I forgot while I was ranting about this that I'm talking to the refugee chat. Y'all got low IQ. I'm just kidding around. I'm just kidding around. I'm just kidding around. Oh, I know. I'm just joking. I'm just joking. I'm glad you're learning a lot, Jesse. All right. So those trades played out great. There's no more trade setups that I'm currently looking for. If you guys are still holding, anybody still hold? Oh shit! Remember the safe sell option on UCAD? 17 pips. Can we call that? Chat, is this fair for me to call? Remember we had this up? Dollar index turns bearish, oil still bullish, break below the bullish structure, break below and retest 1.313. We broke below, we retested and pulled back on the dot, little order block and resistance, 15 pips down. We called that. That was from the start of this. You guys saw the safe sell option start of the stream. Chat, yes, yes. So we're gonna say GJ 35 pips, EU 45 pips, gold 40 pips, 45 pips actually right to key level, UCAD 15 pips, all on one stream. Full breakdowns, what to look for, why. Beautiful, beautiful, beautiful. Dollar also flipped bearish like we were expecting it, and it's continuing down, breaking below key level now. Markets are looking more optimistic to close off the week, but just if you are trading New York or watching New York session, just keep an eye on the US stimulus talks. Read the newsroom to the left here, but there hasn't been any real crazy headlines overnight. Dollar is just melting right now. I didn't call this GJ retest to buy, but I bet I know people in the private chat took that too. Greedy motherfuckers. Jesse, every week we do this in the private chat. Here, let me show you. Let me show old week so you guys don't get good shit. All right, every week, Jesse, we start with the systematic approach in the private chat. First, we start with our mental and psychological reminders because that's the most important part of trading. I use the 1 minute chart for entries on swing trades, intraday trades, doesn't matter. Right? First, we do our mental reminders. Then we make sure we follow a systematic approach. We pre-plan our trades. We execute as per the plan. We journal the result. Then we review a psychology webinar. This is a normalizing losses webinar, but I have like a bunch of other psychology webinars in the chat, like this Capital Hungry Traders Brain webinar. There's like 5 psychology webinars, right? Then we send another mental reminder. Then we do a weekly recap and refresher webinar. It can be anywhere from like 10 to 30 minutes long. And we recap our analysis from last week, talk about what happened fundamentally, and talk about what happened technically. So we're well versed in what's going on in the world and that's impacting markets, right? Then we send a report of the economic calendar of the week to come and the notable headlines. Then we also, this is all on Sunday, by the way. Then we send the Capital Hungry News briefing, where this is just the headlines from over the weekend, right? Just to understand what happened over the weekend. So from this point, you've already had your mental reminders, your psychological reminders. You've already done a weekly recap refresher webinar. You should already know what economic events you have throughout the week. You should already know what headlines are going on. And then this is like a political speakers and central bank speakers throughout the week report. Then we do a market sentiment read. How is investor behavior looking based on market sentiment tools like the US dollar, the yen, the volatility index? How are global equities looking? And then I do a market update webinar where this can be anywhere from 10 minutes to a couple hours long, where we do analysis across pairs on an intraday perspective: gold, GJ, Euro USD, right? And then we send these market update webinars throughout the week, as we're also doing the price action sessions, like these trading sessions and casual Zoom sessions as well. And then alongside these market updates, as you guys can see, these key levels that we're using, how they're very accurate, right? We also have in the Capital Hungry Trade Room price alerts that get automatically sent to the members at the key levels. And then, of course, you also get, we also have the Capital Hungry News Terminal with real-time streaming headlines that like members get access to 24/7, of course. And then you also get session reminder alerts when sessions are opening, when sessions are closing. In this chat, members also share like any headlines they see, any analysis they may have, or trade ideas. I also send more trade ideas in the trade room. And then we're also just sending more Zoom sessions as we do sessions together and shit all the time, right? And then you also get the banter chat. And then, yeah, and then all Brexit headlines live right now. I think a deal can be done. But anyways, you get all of this, you get access to all of that. But that process is what we follow every single week. And anybody in the Capital Hungry private Zoom right now will tell you that, oh, since Capital Hungry has like started pretty much following this process, we've never missed a week or day. I don't think I've ever missed a day or week. And it's only me that runs it. You could scroll in this chat forever, and it's the same week, like, you know what I mean? Every week, the weekly recap, the reports, mental reminders, any fundamental information, technical information, trade ideas, webinars. All the webinars are hosted on Vimeo, like here, for example. I'm not trying to be cocky or trying to be a dick, but I don't think too many services provide that much information over and over and over again about the financial markets. Bah, 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 bah. I could scroll forever. My finger hurts. Oh shit, my thing froze. Oh, it froze. Alright, that's too much scrolling, it froze it. Let me put this back for you guys. But yeah, we've so like yeah, now you know what we do every week. EU, almost 50 pips. UCAD. Beautiful, beautiful, beautiful. Dollar is melting. No, we do another thing. The Capital Hungry private, Zoom chat. I need you to tell the audience about um your experiences in capital. I'm gonna be back. I need whoever's in the Zoom chat right now, out of the 29 people, to tell about your experiences in Capital Hungry, all the content offered, the consistency. You don't have to lie. Like you could tell them the straight truth. If you think it's shit, you could tell them right now, and they'll see it on the screen that you think it's garbage, right? But if you think all the value is worth it, the consistency, the content, the trade ideas, so you guys, I'm gonna be back. I'm just gonna go to the washroom. You guys can read the Zoom chat. I'll just let some of the private members talk about it in here. They'll give you the. Hopefully, they'll talk about it. Yo, Zoom chat. How many of you in here? Let me see. 30 right now. It is getting pretty late, but I'll be back. I gotta go to the washroom. Just actually, just tell them about just tell them about like the value that's actually offered, or if you think there's value or not. You know. But I'll just be back. I'm just gonna go to the washroom quick. Y'all terrible. Y'all terrible at supporting it. I was kidding around. Let me minimize it because they can't see the screen. But yeah, dollar's still melting. Gold's gonna continue up. We might get the break and retest for another buy squeeze above 1912. GJ is gonna continue up. EU is still gonna continue up. UCAD should continue down if you got entries. If I do all this work alone, when do I sleep? I only sleep like maybe 4 hours a day. And the live streams, I usually do like I usually send a poll out to the private chat. Usually there's anywhere from like 200 to 300. The most there was 500 members one time when I was on Instagram like all the time, like posting the results. But then Instagram and shit, all that social media stuff, just like too distracting and toxic. But I usually just send out polls so whenever people vote for it. But yeah, I'll be back in a sec. Okay, everybody. Okay, everybody. It's Friday. We talked about life. We bantered. We made money. We discussed fundamental points. We went over economic events. We made sure we stayed mentally smart. We broke down market structure, price action, market sentiment. Stream reminders for everybody as well. It is Friday. If you did make money because of this stream, don't risk it by over trading or over leveraging or being a dumbass. Go into the weekend happy. Stream has been running for about 4 hours now, so GJ, what? Oh, some of the people are coming on now looking for trade ideas. You should just watch the stream after it's recorded and saved, because we did talk about the intraday trade ideas, or you can just rewind it at the start. But we've been streaming for like 3-4 hours now, so like London session, Asian session closed 40 minutes ago. We already took advantage of the 35 pip GJ buys, 45 pip EU buys, 45 pip gold buys, full breakdown, full reasoning why, everything of what to look for, when to enter. We covered the economic data, the fundamentals. Everybody go enjoy your Friday. I know I will. And that's it, we'll call it a night. Thank you guys for the support. Thank you for watching. Whenever I didn't trade. I only trade Tuesday, Wednesdays, and Thursdays. Like I already showed you can just see the trades I took in the Capital Hungry analysis free chat. But I was just doing this for everybody else, like for the private chat, for the YouTube. I already made my money. I still follow my plan, my discipline. All right, take care.